Okay. All right. There's actually another three more participants to come in, but we shall not wait. Wait. Who is this? Hold on. Okay, all of you all can assume that all of you all can actually see my chat screen. If you do not, please, put it in the chat box or something like that, so we will know that you are not able to see my screen. Okay, yeah. So we have Kumar, Eric, Melanie, Deborah, and then the other one is actually Marcus. The other participant is slightly a little bit late, but he will be also tuning in last soon. Okay. So thank you so much for joining in today for my session. I've got actually another three more participants to join, but I will not wait lah because we have 3 hours to cover. Okay, so I assume all of you are actually business owners, entrepreneurs. You're running business and you have started business. Some of them are actually doing business. Some of them are actually about to start a business. So what we would do is we would just do a quick introduction. Okay, so we will know that each of you share a different nature of business. So I can associate that to my upcoming questions in my slide. So probably I think we can start with Deborah. If you have muted yourself, you have to unmute before you talk.
Okay, hello.
Okay, hi Deborah. Yeah.
Yeah, my name is Deborah.
Okay.
I'm actually just helping out my auntie to do her accounts.
Yes.
Yeah, my auntie is Sundri.
Yes, she does cakes, right?
She's quite famous for cakes and especially sari cakes. Yeah.
Okay, Deborah, do you have accounting knowledge?
Yeah, I've actually done a bachelor in accounting and finance.
I see. Okay. Yeah, that's what she told me, that you're helping her on her monthly accounts, right?
Yes.
Okay,
correct.
all right. So Deborah, she's actually coming in and representing her auntie. Her aunt does cakes and all these things. Okay, we'll go to Mr. Kumara. Probably you can just tell us briefly what is your business all about.
Yeah. Good afternoon, guys. I run a couple of different businesses, but I think for this particular discussion, let's talk about Banana Leaf Restaurant.
Okay. So he runs a restaurant in somewhere actually in Brickfields. Actually, his location is in Brickfields. So he also has a jewelry shop also, but I think it's a combination. Like he's got quite a number of business under him. So that is what Kumara does, Mr. Kumara. So Mr. Eric.
Okay, hi everybody. My name is Erica, and the nature of my business is actually consulting, specifically retail consulting.
Okay, all right.
Yes.
Yeah, Mr. Eric is actually he's been in this industry quite some time, but he was all the while self-employed. So currently he is actually opting out to open his own business lah. So probably he will be having a corporate Senam Berhad. Okay, so that is Mr. Eric. And how about I'm sorry if I actually pronounce your names wrongly. I'm not so good at pronouncing name. Melanie, is it?
Yes, correct. You can call me Mel.
Okay, Mel. Yes.
Okay,
Tell
so
me, Mel.
So I actually run sole proprietorship business. I am a psychologist, coach, and energy healer. So my business is purely service based.
Okay.
I have very basic accounting knowledge. However, it would be great to have a refresher. And honestly, accounting and I have a love-hate relationship. So that's why I decided to overcome my fears and attend this class. So thank you so much.
Welcome, you're welcome. Okay, the other participant actually he's driving. I think he's Mr. Marcus. So he is actually our marketing sifu lah. He actually does this zero-based marketing Facebook. So he's actually traveling lah. So he will be muted lah. Okay, so there's another three more participants, but I'm not going to wait because we have a lot of cover, Okay, so as you all know, right, today's session is the reason why I actually, requested, because some of you are my existing clients, some of you are my potential clients. So you have actually already run through the first round of consultancy with me. And then, you see, every time I get a request from a client, right, to do accounts, right, see, my way of approach is like, I know you're a business owner, you're busy, but I don't expect you to do accounting on your side. But the basic, you need to know at least the basic, so that you, when you hand over things to your accountant, right, it's easier for your accountant as well as you, because it's like you can't just chuck a bank statement to your accountant and just say like, okay, now that's all I have. So because I believe that, of course, some of them are running, it's a one-man show lah. Okay, some you have a group of team working with you, but however, I believe that as a business owner, you will still need some knowledge of your figures, right? I mean, everybody is doing, even though it's passion turned to profit, we are all doing business to make profit and earn a living. So you need to have at least the basic knowledge of what needs to be done and how do you read your financial statement. So this workshop, right, I will not use accounting jargons or tax jargons. So actually this workshop is it's one of my best seller, I would say, because a lot of business owners, I actually do corporate training. So this one is very basic in the sense that I teach in layman terms, so that because I'm assuming that you don't know, because I can't assume that you have accounting knowledge, tax knowledge, and how to plan your finance, right? So these are very important aspects that you need to learn. So just go with the flow. If I'm too fast, you can just stop me. You can raise your questions. If you have, I know you will definitely have a list of questions, but don't worry, I'm still available after the session. I'll leave my emails, my WhatsApp. So I'm there. So you can always ask questions, because different industry have different knowledge. Okay, so just a little bit introduction, okay, about myself. Of course, you would be asking me, what do I do and what's my background, right? Okay, some of you know, some of you are probably, you wouldn't have that entire picture of myself. I'm actually, I'm not a freelancer. I'm not a tax preparer. I'm actually a registered tax agent. So I run my own firm. We have associate partners who do audit, secretary, and accounting. So my forte is actually tax advisory. I handle a lot of tax advisory, tax audit investigation. So more to SME, corporate, individual, expatriates, all tax related matters. We also do cases dealing with withholding tax, all those kind of things. So I'm actually an HRDS certified trainer, because I used to train SMEs on specific tax law topics, on how to go about those topics, because the tax law often changes. So normally we actually have training workshops. So those days was physical, but I used to slow down because I'm so busy with my submission. So when it was MCO, right, I had a lot of requests from business owners who are doing business online. Everything, the whole pandemic started changing during the pandemic. So everybody started requesting, okay, how do we cope? What do we look at? Because you see, at the time it's difficult for you to go and look at for an accountant and all this. So the basic has to be done. So that's when I started realizing there is a request and a demand for this workshop, because people, the reason why I'm doing this, because I want to create awareness. I need you to know what you're doing. Apart from running business, you need to read your financial statements. So the most important chapter in this session, right, I will actually run you through financial figures. So, when you get a balance sheet, when you get a P&L, what to look at, and why do you need to look at those figures. So I'll teach you in a very, very layman term, and especially documents. What are the documents that you need to keep? These are the basic. Of course, like Mr. Eric, he is actually, he just incorporated Senam Berhad. So this is actually similar, but in corporate, it will be more tedious. You have more scope to, discuss about. So at the moment, this particular 3-hour session will be purely on business, entrepreneur business. Okay. I think Mr. Eric went down. Okay. All right. So without further delay, I will tell you, this is the topic coverage for today. Okay. So basically the session will have 3 topics. One is financial statements, which is, I'll teach you what is bookkeeping. Okay. The other one is tax planning. That's very important. Okay. All of you want to know, right? Of course, I don't want to pay so much tax. I don't want to have high tax. So I'll teach you some basic tools, legal tools, not tax evasion, legal tools on how to save tax when you do your business. And then the third one is tax framework. Tax framework, I'll give you an overview how your tax is computed. How do tax agents actually compute the tax? and what are the components that is actually embedded in your tax computation. So you have a rough idea. Okay, so along the way, if you have questions that is related to your business, no problem. Just raise your hands, let me know, or put it in the chat box. I think raise your hands better lah. So it will be easier for me, because I believe I like to look at your faces, because expression is more important for me, so that I know whether you understand or you don't understand. Okay, so I don't expect you to absorb everything. Please remember, just go with the flow with me. Okay, are we all good? Can we start? Okay, all of y'all are muted actually. So if you all are okay, then I will proceed. Okay. Okay. All right. So okay. So the first thing, right, when you do a business, when you actually have decided to go into a business, what would the first thing you need to do is actually you need to choose the form of your organization. That means, what are you actually going to form? What kind of ownership do you think that you want to do? Because this is very important. Huh? The reason why this is important is this is the first business tax planning that you need to decide. Because if you are a sole proprietor, that means you're solely owning the business. Okay, you're starting the business for the first time. So it depends on the nature of your business and the revenue of your business. Why do I say this, right? Okay, the reason you are actually selecting this is because you need to do some tax planning, correct? Because different business ownership has different tax planning rates. So first thing you need to decide is it going to be an entity solely owned by yourself or not? Of course, if you're an entrepreneurs, right? So entrepreneurs, the first thing they will do is to save costs, because you go to SSM, you register, you only pay about $70. And that $70 is not much lah for a startup compared to opening a Sindang Berhad, because you see, if you're running an online business or an home-based business or any small startup business, an SSM for a sole proprietor is good enough for a start. You don't have to go to open, unless you want to open a partnership lah. Partnership is different. Okay, so first thing you need to decide is whether are you the sole owner of the business that you're going to start, or if you feel that you want to put in your husband or your sister or whoever, your friends, to be the partners to share, then you got to think about partnership. Okay, partnership we have two. I will explain in the upcoming slide. So you got to think about partnership. Probably you think that, no, I don't want to. I think the burden is too huge on me. So I want to share my assets and liabilities, my tax with another partner. Could be my husband, my friends, or whoever lah you want. So that is partnership. Okay. So these are the three questions that you need to actually decide first, even before opening or before thinking about a business. So which category that you want to choose, because everybody wants to keep their operation as low as possible, right? The first thing you look into is the cost. Okay, so we're good. We understand what we need to do for the first thing. Okay, all right. So I've put three bubbles here. If you realize, the first bubble is sole proprietorship. Okay, the other bubble is partnership, and the third one is limited liability partnership. Okay, how many of y'all are actually in sole proprietorship? Mr. Kumara, I think he's in a sole proprietorship. Yes, Mel is there. I think even Marcus also is in sole proprietorship, and Mr. Kumara also, yes. So Deborah also, yes, your aunt is actually a sole proprietor, because I have all their bank statements with me. Okay, so you see, all of us are actually in the first bubble, okay, because you're starting the business. It's a startup business. Not necessarily it's a startup business, probably you don't want to actually incur any additional compliance cost. So you look at it, you're actually at the first bubble. Okay, then like what I said, probably you will come to an agreement that, okay, you know what, it's a family business. So I just don't think I'm going to take over as a sole proprietor. I would like to get my husband in or my siblings in, so everything is divided equally. Partnership, minimum is 2, maximum is 50. There's no limitation. So that's a partnership. Okay, if you look at sole proprietorship and partnership, right, the tax bracket for both is the same. There's no tax savings here. Both are individually taxed. Okay, I will share the tax bracket and tax planning at the final session, because we have 3 sessions, right? So I will actually bring this back, why we actually say that sole proprietorship and partnership has no difference. It's just a formation. It's up to you whether you want to run it solely or you want to bring someone in. There's no tax impact of it. So it's okay. You can select this or either you sit in this bubble. Okay. What happens when you actually move to a limited liability partnership? Okay. First thing, before you even go here, right, you'll be wondering, right, what is the difference between limited liability partnership and a partnership? Okay. Limited liability partnership is actually a mirror image of a company. Okay. What the income tax law has done is, okay, for example, you are complaining, oh, you know, the tax bracket is so high under a sole proprietor and a partnership. Okay. But at the same time, we don't want to actually incur the cost of compliance because you know, right, if you actually incorporate as an Berhad, you need to engage a secretary, you need to have an auditor, you need to actually have a tax agent, and then every month you need to file annual returns as your secretaries will file the returns for you. So this cost of compliance is fixed. You have to incur this when you open a Sinem Berhad company. So what happens to sole proprietors like us, for example, we feel that, oh my God, that's, you know, the cost is a bit too much. I'm not making much, but of course I'm making, but my tax rate is high. So, you know, when you have all these elements around, so what can you do? At the end of the day, the LHDN decided, okay, fine, we will give you something called limited liability partnership. Okay, so it's called LLP. What happens in LLP is you can enjoy the same benefit of tax rate in a company. You need not have to actually have an auditor, have a secretary. Tax agent, yes, you must have because the filing of a limited liability is not as the same as sole proprietor or partnership. So the tax compliance, you need to have someone to do for you. But the accounting, you can do it yourself or you want to give an accountant also, okay. You don't need to appoint a secretary. You don't need to have an auditor. Okay. Why is my voice? Okay. All right. So these are the two things that you don't need to have actually. So you don't have to incur this cost of compliance. Okay. What do I mean of tax rate? Okay. You all know, right? For sole proprietor partnership, your tax bracket is actually like the first 5,000, then the 10,000, the 20,000. I will share you the brackets later. But what will happen in limited liability partnership, right? You have a flat rate of 17% only. For example, okay, most of the time what I do with my clients is when they are actually a sole proprietor, I will actually analyze their accounts. I'll tell them when they can actually move from sole proprietorship to a liability, to a limited liability. But a lot of accountants get this wrong because I get clients who come and tell me that, no, my accountant immediately told me, no, you form a limited liability. You see, you should not form a limited liability partnership if you have not reached a chargeable income of 500,000. Because below 500,000, you still will be charged under a lower rate. If your chargeable income is above 500,000, then yes, you have to stop. You have to pause. You have to ask yourself, hey, if my chargeable income is going to go 500,000, definitely my individual bracket under sole proprietor and partnership is definitely higher than 17%. That is the time you will actually switch over to limited liability partnership. That is the first tax planning we actually do for our clients. We will assess the chargeable income bracket. So you got to know where are you actually sitting down, or you have an estimated projected revenue or chargeable income that if you are still below 500,000, please do not open an LLP. It's just not worth it at your time and cost. You can still stay under the bracket of sole proprietor or a partnership. Limited liability only comes in when you are actually, it's a requirement. Okay, sometimes some tender requirement, you need to have a senior berhad or an LLP. But most of the time, what happens to limited liabilities, people form this is to enjoy the tax rate benefit, the 17%, because once your chargeable income is above 500,000, right, then you will actually be paying a very huge tax under these two bubbles. So that is the reason you move to limited liability partnership. At the same time, you don't have to worry because your only cost is you just do your accounts and submit your tax. That's all. You don't need to file anything. You don't need to engage an auditor, send in SSM monthly annual returns and all these things. You know, you don't have to pay secretarial charges. Okay, so far, do you all follow? Have you all heard about limited liability partnership, or has any of you all thought about moving on to a limited liability partnership? Hello, are you all there? So I don't
Yeah.
want you all to sleep off, because I know it's
Yeah.
Sunday.
Yeah, we heard about it, but yeah, it's good information to know that anything more than 500,000, you need to go.
Yes. Because people don't understand the concept. They immediately tell you that, okay, you just form the LLP. You see, when you form an LLP, right, there is also a different set of rules. You need to actually have an LLP agreement. You need to get the accountant, the tax agent, because we draft out LLP agreements. And then there's a lot of legal disclosures that you need to put. You cannot just simply open up one and then say that, okay, you and your two other partners, because that also same partnership, you can have many, there's no limitation. So whatever you book in as an expense, it has to be documented. So when you look at all this, right, it's like an unnecessary headache, because if you are a one-man show, you might as well go back to this bubble, because everything is there, and what you need to know is what is your tax rate. So you should actually analyze or get proper tax advice before you actually move on to limited liability. Because I've got a lot of clients who have actually come to me after being incorporated into this bubble and finding it a bit hard to come out, because the closing of LLP is also not cheaper, because it's totally a different process. You need to advertise in the newspaper, you need to shut it down, you need to strike it off, you need to get tax clearance. So this is another headache. So people don't understand what is the legal compliance, not only just going and incorporating the company and then suddenly decide that I don't want to do anymore anything, I'm going to close it down. Sole proprietor partnership, no such thing. It's very simple, very straightforward. You do up your accounts, you close it up that year, you're done. That's about it. SSM also will not disturb you. LHDN will just check on your tax filing. So just be very sure when you want to open this, because even this limited liability partnerships, I run a specific topic, can go about 2 to 3 hours. So we have that much of tax law compliances for this LLP. The reason why I'm explaining this to you is because all of y'all have definitely started with sole proprietor. But as you move on, let's say you're a bit skeptical, you want to jump to a Senam Berhad. But before jumping to a Senam Berhad, I would advise you move to LLP first. Plan your LLP first. Thereafter, take a leap to the Senam Berhad. Unless you tell me that no, Tilis, it's a requirement that I have to be Senam Berhad, then you have no choice. You have to incorporate Senam Berhad. So you see, you gradually will do the planning, not jump from one to the other and then end up thinking that, oh, I shouldn't have opened this because it doesn't benefit me in any way. So you need to look at the tax planning aspect. Okay, follow? Hope I'm clear, because I need to explain this to you. Okay, someone is asking me a question. Hold on, guys. Okay, all right. Okay, so I'll just move on. Okay. So now we will look at financial statements. Okay, the first thing, right? Why is it so important to actually know what is your financial statement? Okay, what do you think financial statements are actually? When I raise a question of what is financial statement, right? So what do you think financial statements are actually? Just give me a random so that I know that you are aware what is a financial statement. To you, what is a financial statement, Mel?
To me, is to see how the cash flow, I guess, for the lack of better words, the cash flow, the health of the company, quote unquote, how is it doing? Yeah.
Okay. So what do you actually precisely think when I refer to the word financial statement? What is that referring to? What document it is referring to actually? Any idea?
P&L.
P&L, yes. Okay, one is P&L. P&L is profit and loss account. Okay. The other one is called balance sheet. Okay. So my next session will be purely on teaching you and guiding you to actually understand, interpret the figures on your profit and loss account and balance sheet. Yes, Deborah. Okay, definitely because she is doing accounting, so she will know that. Okay. So why do you think actually financial statement is very important? You'll tell me, Tilis, I'm a business owner. I don't have time for all this. I just give it to my accountant. Yes, I do understand you need to give it to your accountant. But who is doing the business? You are doing the business. Am I right? So when you do your business, Whether you like it or you don't like it, you need to know your business. Where is your business heading towards? So how would you do all this? How would you actually have a knowledge that what am I doing? Okay, I'm going to turn my passion into profit. But is my passion turning into profit or going into loss? And how am I going to sustain this business? Am I right? That is the reason you are doing your business. So giving the documents and books to your accountant is a year-end process. But before that, what is involved in this and why bookkeeping is very important is these three main things. Okay, you say you can't plug figures suddenly from nowhere, right? Even though you run a multi-million business or so, the owner will still come back to the figures. You need to know the figures in order for you to make financial management decisions. You don't know the figures as the owner, right? You wouldn't know where your business is heading. You won't even know whether you are actually in a state of surplus or a deficit, whether you need to request for help or you don't. Or do you think that the company can grow? Do we have enough of capacity to actually invest? Or do we need to get investors? So all this information indirectly needs to be fed to you, right? And who will need to feed that to you? Of course, your accountant will do, but at the end of the 12 month, the accountant will do for you. By then you'll be like thinking that, I should have done this at the beginning of the year. I would have secured some things. I would have applied. During MCO, I did a lot of loan application for my clients. So you need to know bookkeeping because you need to read, you need to come to a conclusion for financial management decisions. That is the core of your business. Definitely it's the core of your business. Okay, then the next thing you will tell me, okay, fine, so now I know everything already. I mean, I more or less I know where is my business, what is my financial strength of my business. So what happens next? What if you're making a profit? Because we file our returns the following year, right? So once the year has ended, that means the basis period is actually closed, you're not able to go back to that year and reframe your tax. You can't do any adjustment. The cutoff is 31st of December. So it helps you to actually prepare annual tax payment. Annual tax payment means you will have a projection. What do I normally do for my clients is like we do corporate tax, right? So we will do a quarterly tax provision for them and we will prepare the cutoff of the tax estimates for them. So basically we will advise them in advance what is your projected tax payable for the upcoming year. So you can start now, you can plan now your annual tax payment so that you know how to manage your cash flow in your future. Because you see, corporate tax is quite huge. You cannot come up with suddenly about 600,000, 800,000 in just 2-3 months and pay off the LHT. You have to pay. If that's your revenue, you have to pay. Same goes, but you'll be telling me, no, Latiles, I'm just like a small company. Even though you're a small company, right, you still need to manage your tax. So how do you manage your tax? You need to start now. So you need to know, okay, in the next 12 months, this is what is going to happen to me. I'll also teach you how to do a cash flow projection, a very simple cash flow projection, which we did for so many of our clients during MCO. This is actually very helpful for you to see your business. Okay, so the next one, the final one is to plan your business to the next level. Like what I said, indicated, either you want to invest or you tell yourself that, okay, I think I better slow down now, keep all my capex low, my capital expenditures low, or my operating expenditures low, so that I can sustain my business. So these are the three main reasons why, as an owner, you need to know bookkeeping. Although your accounting is done by an accountant, but will actually help you to plan your business. It doesn't matter whether you're a sole proprietor or even though you're a company director, the company still belongs to you. So these are the decisions and information that needs to be fed to you. Okay, follow? So that's the importance of bookkeeping. Okay, actually there's so many, but I only focus on these three because these are practical aspects that we focus for our clients, for our MNC clients, SME clients, because this is what will impact the operation, the financial operation of the business in the long run, especially now during this pandemic. Okay. All right. this is the most important thing. Okay, why I emphasize on this? Okay, all of y'all are actually sole proprietors. Okay, so you know when you prepare your bank statement, you say that okay, I've got my bank statement. That's all. Okay, you see, bank statement is not sufficient. Okay, the proper way of actually doing bookkeeping at your end. Okay, the first thing that you need to do. I'm not asking you to do accounts. Accounts, you leave it to the accountant. Let the accountant do the accounts for you, because we are business owners. We don't have time and we don't have knowledge to do accounting. So accounting, let the business owners do. I'm just going to teach you what you need to prepare as a business owner. That means the first bookkeeping session you need to do, the first phase of it. Okay, so these are sample of documents, but don't get stressed out because oh, why so many documents I need to prepare? No, 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 no. This is just an example, okay? Because we also cater for SMEs and then multinational companies. So as you go bigger, there's more documents needs to be prepared. Okay, but for you, for this session, right, I would say the most important one is you start with your invoices. Okay, every time you actually have a customer request or a client engaging you for something, whatever service or product that you are actually delivering, you must have an invoice issue. Okay, you must have an invoice issue. Okay, how many of y'all, by looking at this source of documents, I need to ask an honest question. How many of y'all have actually prepared these documents? Not everything, at least something. Forget about bank statement. Bank statement is actually retrieved from the bank. Oh, okay. Mel said, oh, okay, good, very good, very good. So how many of y'all have actually prepared this? And me, almost all. Great. Okay, definitely, because you're an accounting person. So definitely, you know, all this is very important. Okay. The other one is, okay, Mr. Eric and I forgot his name. He's putting his iPhone back. Okay. So I just want to know, because you see, you need to prepare some forms of documents. Okay, this is a daily thing that you need to do. If you cannot do it daily, it's okay, no problem, not an issue. But at least you need to do it 3 weeks once, or if you can actually track and do it monthly, it's still fine. It's still fine as long as you are aware of your business. Because I mean, it's one man show, right? So you know, okay, this week I've done about 10 to 12 clients. Okay, I'll issue out their invoices. Okay, when I say invoices, right, it doesn't have to be any specific, customized software invoices or what. No, one is, yes, you can get a lot of free softwares on the internet. You can go up and look for them. Okay, you can start logging in, register yourself, you issue from there. If you cannot do that, someone is reading the question. Okay, good. Eric says he does it once a week. Fine, that's good. Okay, so let's say if you actually don't know where to get this invoices, very simple. Just do it in an Excel sheet. Do the invoices in an Excel sheet at a running number. That means you start 1/2021, 2/2021. That means every month you have a running order invoices issued to your client. Okay, you don't have to print it. You can print it at year end if you want. Okay, so every time an invoice goes out, I mean, if you are actually providing a service to someone, you must have an invoice issue. Okay, so there is a reason why we're asking you to do this, because we need to actually reconcile all these documents with your bank statement. So invoices, if you let's say you tell me I can't go and get a software, I don't even know how to do in an Excel. Very simple. Go to a stationery shop. Ask them a pre-printed invoice. You can actually customize your own company invoice and get it printed as well. Okay, so these are options that you need to look into, because you need to have invoices, sales invoices, which will determine the revenues that you have actually built and received for the year. So sales invoices is very important. Okay, these are few ways where you can actually go and produce invoices. If you really don't want to do all this, you just get a sample of invoice, create in an Excel sheet. That's the most easiest way I always teach my clients. So every time you have something, you have already done a sale, you just issue. You put the details down there and put it on the running number, and it's done. You don't have to, sit down and think about the invoices. Okay. The next is receipts. Okay. When I say receipts, like actually this receipts is it's no longer not to say valid. It's not a major requirement by the LHDN because receipts is because at the end of the day will already have our supporting as our invoices here. So receipts is something that you give your client. That is up to you and your client. But if you want to keep them, you can keep a copy. Remember, normally they have a carbon copy. They keep it. But nowadays everything is online, so receipts it's not so material nowadays for the income tax. The other one is checks. Okay, any of you are using checkbooks here? Okay, if you use checkbook, please remember to write the details at the check stubs there, because sometimes when you issue a check, you will actually overlook the details and the dates. So you need to put it down. Yes, I understand the check dates will be there and it's actually recorded to your bank statement, but you need to put in the details in the check stubs there. So those who has check, just ensure you put your details. That's all you need to do for check. Okay. Deposit slip. Okay. Now deposit slip, every time you put it into the machine, right, the thing fades off. You can't keep it too long. So if you want, you can still overwrite on it in a black pen and keep it. But deposit slip not necessary, because once you bank in, it will reflect in your bank statement. So now IRB is not so concerned about deposit slips. But in companies, yes, we still ask them for deposit slip because it comes from different clients. Sole proprietor, the amount is not so huge, so it's a little bit immaterial for LHDN. But companies, yes. Okay. But the most important one is payment vouchers. How many of you all have knowledge of what payment voucher is all about? This is the most crucial document that you need to have during your, your business. Anybody? Anybody knows what is payment voucher all about?
Yeah, whenever you issue out any payment.
Correct. So many people don't do this. Okay. You see, when you issue out or when you make any payment, you must actually have a payment voucher attached to each of your expenses. Okay. Each of the expenses you must have, because every month what you do is your payment voucher. Let's say, for example, you're paying your rent or your utility bills. Okay. So your payment voucher, you put your utility bills at the back. And if you made an online payment, you make a payment and you have to clip all three of them together. That is how you actually record your transaction. And let's say if you tell to me, no, my figures are very small, so I can't be doing everything. No problem. What you can do is you just accumulate all the figures and put on in your payment vouchers. Okay, this is from this date. I've actually purchased all these items, all the small items, everything. Put a note down there, and this month attach with the invoices or PO or whatever you get with your payment and clip it. So you need to do this for every month for all your expenses. So this is also a very, very important document. For me as a sole proprietor, you need to have these payment vouchers, because sometimes after 6 months down the road, right, you don't actually remember what was the payment done, because we always tend to take out money. We withdraw cash. Okay. One problem with sole proprietor is, how many of you all do this? You actually withdraw from your business and then you go and make payment. Then when you come and ask you doing the accounting, then you'll be like, oh, I'm not too sure what I paid this for, but I took out money from the company. But it is for company use. So how would you want me to account that as a company expense? See, you get where I'm coming from? So how would you justify that this withdrawal done from the business, because right, every withdrawal that you do from your own business is considered a drawings done by yourself. That means you're taking out cash from the business, but we have no idea what is the cash flow unless you have a payment voucher stating that this is what I use this for, this is the amount, and attached there with what I've paid and my online slip. So next time you can always tell us that, look, I took out 10,000, but the 10,000 was not for personal use. It was all solely used for business. Because this is the issue that is now the income tax is checking, because every sole proprietor makes a drawings out and say that we use for business. Because the bank will not be able to reflect anything. It just shows that money withdrawn by owner, by sole proprietor. That's all. So payment vouchers are very, very important, crucial, because we also need to reconcile that with all the bank transactions. Okay, debit note, credit note, I'm not going to explain because that's not really valid for you guys, unless let's say if you actually issue your invoice. Credit note, maybe yes, because I mean, and debit note very rare happens. Like credit note, maybe you give a discount or what, because sometimes we issue in the invoice, we discount the invoice itself and give it. Or you, if not, you have issued an invoice and then you want to give, then you issue a credit note to the client because you're discounting the figure. But in sole proprietors, very rare. Like company, yes, we do that because we have voluminous transaction going on. So credit note is okay. You don't prepare also, it's okay. It's not an issue at all with income tax for sole proprietors. Okay. So next is bank statement. Bank statement, very simple. Whenever you make any transaction, just don't forget to put in details, narration of the transaction. That's all. If, of course, you can't write so many things in the transaction, but just putting details that okay, this is what you paid for. At least some brief narration so that when we do a bank recon, we know okay, we need to tie, because sometimes you will knock it off with some figures. Other than that, you don't have to do anything. Just go and print it out from every month. They will give it to you. So you just take it, file it. What you need to do when you get your bank statement is your payment vouchers, your invoices. This has to be done every month for all your inflows and outflows of your cash. So bank statement, nothing much. You just extract it and they will give it to you. Credit card statement. Okay. There are a lot of sole proprietors who got credit card statement. You can use your individual credit card to make payment for your business, because sole proprietors, you cannot have a credit card under your business. It's definitely under your name. But companies are a bit different. Okay, I say like Mr. Eric, let's say if you want to have a credit card, please apply a credit card under the company. Do not bring it under your name as a director, because it's always better to have a credit card under the company and everything is charged there. So it's very easy for us to just recon the whole expense. We'll charge the whole expense back to the company. But for individual sole proprietors, please remember, you cannot, it's not that you don't have, you cannot open a credit card under your ABC enterprise, because you are actually the owner of the company. So, but however, a lot of my clients will ask me, because I use it for my petrol claim, I use it for my this one. You can use it. The only thing here is at the end of the filing period, you need to do a summary of all the petrol claims, toll, parking. If you only solely use it for that, not an issue. You just give it over to your accountant. She will know what she needs to do. But it's a personal credit card statement, right? So I'm sure you will use it for buying, going for, okay, of course, now you cannot go for movie, right? Because of the pandemic. But if not, you swipe for movie, and then you swipe for this. I don't know. I don't have a credit card. So all the other transactions are inside that. So in order to actually identify or reclassify this, that's definitely a separate work that we need to do. But you still can use a credit card statement, because a lot of my clients will always ask me this question. Oh, a lot of this I paid in my personal credit card. Then you won't be charging it to my company as an expense. It can be done and it will be done, but it has to be classified properly and it has to be identified and summarized to be charged to your company. So your accountant has to do that lah. Okay. Loan statement. Okay, loan statement is if you have actually taken any loan, then you'll have a loan statement. If you have not taken any loan, forget about that. You don't have to worry or anything about that, because this is also one of the requirements, because this loan will be reflected in your financial statement. So in case you get audited, the income tax will actually request this loan statement from you. Okay, employee time cards, you don't have to worry. It's only for a Senem Berhad or that's only for Senem Berhad lah, because if you have a team of employees, you need to have the punch card, their online system. Employees have their own card. So sole proprietors, forget it. Why I've put down this for the entire overviews, these are the basic documents that you need to prepare as a sole proprietor. To be very honest, I think now things are become much better, because before this, I always get taxpayers coming to me and saying that this is my document. Yeah, this is my bank statement. That's about it. So you see, you cannot actually identify and summarize and prepare a profit and loss or a balance sheet, simple saying a financial statement purely by looking at a bank statement. There's nothing much. Bank statement, you only can see cash inflow, outflow, that's all. Maybe one or two basic expenses, we can pick it up. But you need to identify whether all the income that is coming into the bank, is it your revenue? Or all the expenses that is going out, are they all 100% related to your business? So how do we do that? We need documents. And these are the basic documents that you need to actually prepare. So do you all have any questions on these documents? Are you all in the midst of preparing these documents, or you have questions like, is this important, or how do I prepare this? So I give you, 2 minutes to digest this and ask me, because this is very important. You need to prepare these documents.
Sorry, I have a question.
Yeah.
So for the employee time card, what if the company does not have it, as in they go by flexible hours? Because nowadays, many companies, they don't have a clock in, clock out system.
Okay, so when you say they have flexible hours, right? I'm sure they have like a punch system, like okay, this is either you have a punch card or you have this, this electronic device where you swipe in and swipe out.
Okay, so example, that is like an IT company, so we don't have that, because sometimes even on weekends and holidays we do work.
Okay.
So the company has given like a flexible hour as long as work get done.
Okay.
And there's no timing. There is a timing, like company policy is 9 to 6.
Okay.
And no one actually doing that. Actually, there's no time card punch machine or.
So how do they actually monitor that that you are actually working? Your production time is about 6 hours per day. How do they monitor that? I'm sure there is a
Normally there's someone you report to.
I
example,
see.
in IT, so you have like they have like a monitor system where you have targets to reach.
So probably I think is when you log in, right? When you log in, there must be someone who is actually having a record on the hours that you are working, because you definitely have to log in. If you're reporting to someone, that means when you log in, the person has the time that you are okay. You have started working.
Yeah, so we don't do that. Like we don't have that. As in, yeah.
Oh, okay.
So
how do you?
Yeah, it's like if you take leave, we just email to the HR.
Because you see, normally, right, I used to work in EY and Shell, right? We do have flexible working hours, but we personally have a swipe card where we actually log in. Okay, that was, yeah, probably now because it's flexible. But even though that, right, when we used to do reporting to our team, we will actually there is a system there. There's a device where we log in, so it will basically show that you are actually logging in, you're working, and you have a couple of hours that you are reported, and you log out. So that will be my employee time card.
Oh, okay.
Yeah, so I'm
so
not
there
sure
can be
how...
several ways to do it for employee.
Yeah, correct. There's several ways. One is swipe card. Okay, the other one is employee time card, where you punch in and punch out. Okay, so everything you punch in, punch out, physically the card will show your hours. Then the other one is, now everybody is flexible, so you have a system to actually track that when you log in and then when you log out, so you have your operation hours there. Because you see, if you don't have such a thing, right, then how do they track that you are actually working, and how do we actually accumulate our hours and set it off against our leaves?
Okay, I understand.
So there definitely must be, especially in big IT firms and all these MNC companies, there is a system to measure this, an internal system to measure this.
Okay.
Okay. So any other questions regarding the documents or what you need to prepare? Okay. So these are the source of documents that you really need to prepare. If you cannot, the next question you ask me is, okay, where do I go and look for all these documents? Okay, no need to worry. No need to prepare any bombastic documents or customized documents to show that, oh, this is from my company. No. Like what I said, there's only two things. One is you go to an Excel sheet, you create. Okay, you just create a sample of vouchers. Okay, just create sample of vouchers, prepare payment vouchers. You can do it in the Excel sheet itself. If you think you don't want to do that, go to your nearest stationery shop. Okay. Once you go to your nearest stationery shop, just walk in there. You get the invoices and payment voucher books. It's okay. It's acceptable as well. So you can even buy that and prepare that also from them. As long as you have these basic documents with you, you should be on track.
I have got.
Yeah.
I think it's more related to my personal taxes against my normal proprietorship business.
Okay.
How do I? Because I do have a personal tax number for LHDN.
Okay. All right.
So how do I tie up my entire?
Okay. All right. I know what is your question. Okay. Just remember, right? Personal tax and business tax is one tax number. Okay. What will happen is when you are getting an employment income, your tax number will be SG. SG.
Right.
When you have a business income, your declaration will be a combination of your personal income and your business income. So your SG will move on to OG. See,
Okay.
Mr. Kumara, you have not submitted yet, right? We are supposed to update your backlog.
Yeah.
So actually, by right, if you have actually, we have updated your backlog this year, right? Next year, your tax number will change from SG to OG. What we will do is we will actually prepare your accounts. And when we do the tax com, that's why I said you need to have a tax agent, because employment income, very straightforward. You just put your income, look into your reliefs and you're done. But business income is not like that. You need to combine both of it, compute tax and submit.
Okay.
So your number will change. So your income declaration is a combination. It would not be anymore a separate declaration. That means you don't go and declare for your separate, for your employment income one and then for your business income one. No. You got to combine and submit it before 30th of June. Even if you have rental income or any other source of income, everything is a combination and a pool of submission we have to do.
Okay.
So later I'll show you the framework, then you will have a better idea. Oh, okay, this is how it has to be submitted, because there's a lot of mistakes done like this, because I know as taxpayers you want to save the cost, but the issue here is you're saving the cost for the wrong reason, because when you do a wrong submission, when you have a business income, you're going to lose out in penalties and making a wrongful error submission. So that's the reason when you're first time doing a business itself, you got to get it correct. Get a tax agent to help you submit. If you want to do your accounts yourself, that's up to you. But the tax part, you need to do a combination computation, because a lot of elements will be there. I'll explain to you all in the last session. So you will have an overview why I'm saying this. How is tax computed for business and how is tax computed for individuals? Okay, are we good? If there's no questions, then I will actually move on to the next session. Okay, all right. Remember I was talking to you about bookkeeping, right? Bookkeeping and accounting. How many of y'all think bookkeeping and accounting is the same? Anybody? Do you all think bookkeeping and accounting is the same or both are different actually? Okay, someone is answering my question. Different. Okay, great. Mani says different. Okay, you see, actually, people don't understand this. Whenever they come and tell me that, oh, I've done my bookkeeping. You see, bookkeeping and accounting are two different process. Bookkeeping is you're keeping your books. So what are your books actually? Your question is, this is your books. You need to prepare and you need to keep your books. Just remember, bookkeeping is keeping your books. You're not doing accounting, huh? It's just bookkeeping, keeping your books. Accounting is you are in the process of preparing that books into financial statements. That means you're converting that into financial statements. Okay. So what I'm going to do now is, right, okay, this session will be a little bit boring for you all because it's the accounting session. All the while, I taught you all about the source of documents, the importance of selecting the organization. Now I need to teach you the accounting portion. Okay, for Deborah, okay lah, this is like a walk in the park lah. Okay, so for y'all, just follow through with me. Don't have to memorize anything, don't have to remember anything. The reason why I'm showing you this is you need to understand the concept of this. Okay, so basically there will be 3 stages in this, from the bookkeeping into converting into the process of accounting. Why I'm explaining to you to this is right, because I will need to teach you how to look at the financial statements later. So if you don't know how the accounts is prepared, right, you wouldn't know how to read your financial statement, because you'll be like wondering that where did this figure come from? Correct or not? Even though I'm going to teach you, okay, Mel, this is how you look at your assets, then you'll be wondering, okay, but where did the asset figure come from? So I have to run you through this. Just go with the flow. If you don't understand, just raise your hands. Okay, I'll clear it on the spot. So basically, you see, we have done with the first step, that is classifying source of documents. These are the documents, your source of documents. So what do we normally basically do is the first thing we will collect all these documents from you. Okay. So before we go to our accounting, the first thing we will do is recording books of prime entry. That means from the source of documents, we will start our first thing called recording. Okay. Recording books of entry simply means is called journals. We will prepare journals. From your source of documents, we will prepare journals. After we have actually prepared journals, we will summarize the posting entries. What do I mean summarize the posting entries is we'll be preparing ledgers. Okay, so of course, this journal and ledger is definitely something new for all of you. Okay, because you don't have accounting background. That is okay. We are not here to learn accounting. We are here just to teach you the concept, to understand that before we read your financial statements. Okay? Okay, so these are actually all the journals. These are all the sample of journals that we will actually open up as books of prime entry. That means what will happen is, after looking at your source of documents here, okay, which is the first stage, we will go to the second stage, which is called as recording books of prime entries. We have a lot of journals to open. We have cash book, payment journal, receipt journal, purchase journals. Okay, you'll be wondering, right, where is all this journal coming if I'm saying I'm opening from the source of document? Payment journal will basically come from your payment vouchers. Okay, receipt, I told you, don't worry about it. Purchase journal. Purchase journal will come from your payment vouchers. That means whatever payments that you have done, right, we will analyze that. We will open up journals for all this, and we will put everything, we will lump sum everything into a purchase journal. Okay. Sales journal, where do we get the sales journal? Is from your invoices, your sales invoices. So basically, we will get your sales journal. Written inwards, written outwards, forget about it. This is actually for stocks. Whenever the stocks come in and go out, we use that for stocks. So it's not for your Senyum Berhad. Yes, they do need to look into this. So these are books of prime entry. This is what I'm teaching you now is we are doing recording. We are recording journals. Okay. From the journal, the last stage, what we will do is posting entries. Summarizing posting entries. What do I mean summarizing posting entries is? These are the 4 main ledgers that we will summarize. After opening up all the journals just now, right? We will summarize all these journals into ledgers. That means we will summarize them into transactions. So basically, there will be 4 main ledgers that we will open actually. One is sales ledger, creditors, purchases, and general ledger. So this is the third stage. First stage is we actually source out all our documents. Second stage is from the documents, we actually record our journals. These are our journals. The third one is we will do a posting entries into our ledgers. Okay, so this is just, I'm explaining to you what is the process of first stage of accounting. Okay, I will show you the samples, then you will get the flow of it, of what am I talking. Now you'll be thinking, what is she talking about? Journal and then a ledger. So that's the reason I'm explaining to you. After these 3 stages, I will explain to you how does this work. How do we capture each transaction from your bank in order for us to prepare your final statements. Okay, so far, do you all follow before I actually go? Everybody okay? Debbie, I think she should be okay lah. She's an accounting student. Okay, someone put. Yes, Ken. Okay, good. Yes. Okay, very good. Very good. Because I want you all to understand. I know I shouldn't go if you don't understand. Okay? All right. So we will go on. Okay. So now I'm slowly bringing you into the accounting process. Okay? So you just remember, this is the basic equation. No matter where you go, what you do, accounting equation is all about assets equals to liability plus capital. That's up. So I'm going to explain to you slowly what is assets, what is liabilities, and what is capital. That is what I'm going to teach you. I'm going to guide you on how to actually read your financial statements. But before going there, you need to know how do we derive the figures to go there. So that's what I'm going to take you through now. Okay. You remember just now I explained to you, right? I said I'm just explaining. I will show you journal entries, ledger. So now we will start with one simple transaction. Okay. So for example, this is actually Mel's book. Okay. So if you say Mel, the example here is we are talking about assets. Remember the equation just now, actually asset equals to liability plus capital. So what I'm going to explain to you now is I'm going to take each items and I'm going to explain to you one transaction. Okay. For example, okay, if you guys don't follow, right, please raise your hands because I can't see your faces here. Raise your hands and let me know you have questions. So it's easier for me to, guide you. Okay. For example, 1st of January, you bought a computer, 2,500 by check. Okay. The first transaction will actually basically tell you this is what's happening. So I took Mel's book, bank statement in the month of January. When I was going through her transaction, I realized she has bought a computer. Okay, so she has a payment voucher, she has an invoice from Dell, and she has made a payment from the bank. So what do I do? The first thing is, my first step is I have to open my journal entries. Okay, journal entries is actually, do you see what is DRCR? Okay, this is debit and credit. Like what I've explained, you cannot understand what is debit and credit, which one is debit, which one is credit, because that one you need to have accounting knowledge. So Debbie will understand this. What you need to understand is basically the concept.
Done. Nothing else.
Kumara is not muted. Okay, all right. Okay, sorry. So, for example, when I say January 1st, I bought a computer 2,500 by check. What do I mean by that is immediately you know that there is an asset involved, right? Computer is an asset actually. 2,500 by check basically means it refers to a bank transaction. So what will happen is I have a debit computer and a credit bank. Okay, so these are my journal. Remember I told you I need to open my journals first from my source of document. After my journal, I need to do my ledger posting. Okay, this is your journal. Okay, so what will happen to the ledger posting is we will separately open the computer account. Okay, we will debit the bank and we'll open the bank account and we will actually credit the computer. So these are my ledgers. Ledgers are separate accounts open. You see computer account, bank account. So this is the process of actually doing your accounts. These are the books of prime entry. And this is the ledger posting I'm doing. So every time we take your bank transaction, we will analyze your transaction in your debit and credit. Which is debit, which is credit, it works totally different for assets, liabilities, and capital. This one, you don't have to understand, you don't have to memorize, because this one, and like what I said, you need to have accounting knowledge. What you need to know is how does an accountant analyze your statements, your transactions in your bank. Okay, this is an example of asset. Now I'll give you another example of liability. Okay, what is a liability actually? Asset, you all understand, right? Something that belongs to you. You are the owner, which means the company is the owner of the asset. It is in use of your company. What about liabilities? Okay, what is the simple definition of liabilities? Can anybody tell me what is the simple definition of liabilities before I actually explain?
Owing.
Correct. You're owing. That's right. It's a debt due to someone in the near future, right? So what has happened in this one is it's a liability. The first one is actually an asset. Okay, it belongs to a company, to your company. The liability, if you look at it, it says that in January 2nd, I bought an office equipment worth of 1,000 on credit from Jati Enterprise, which means it's on a credit term. I did not make any bank payment nor a cash payment. So I still have a debt owing to the third party. So what I have simply done here is I know it's an office equipment, which is an asset to my company, but it was purchased on credit term. So what do I call Jati Enterprises? Why do I put accounts payable is this is actually a layman term for you to understand. That means it is due, payable to a third party in the near future. So you see, my first journal entry will be my office equipment, accounts payable. Accounts payable actually, this is layman term because I want you to understand. But in accounting term, it's actually called creditors. Someone that I owe that I need to pay back in the near future. So I will open a debit and a credit list. So I've done my journal entries now. What I'll do now, I'll move on is I will do my ledger posting. The same process of here, only thing the entries will be different. Office equipment, I will debit my accounts payable. My accounts payable, I will actually credit my office equipment. Which is debit, which is credit, you must have some accounting knowledge. So that one, you don't worry about it. Okay, what you need to understand is the concept. It's the flow and the process of how these journal entries are picked up and how the ledger's posting are done. Then you'll be asking me why we need to open all this. Yes, there is a reason why we need to analyze and why we need to open. So if you realize that you already have computer account, okay, then you already have a bank account. So every time the next transaction will come here, the second transaction, then the third transaction, all your transaction will be analyzed and you'll only open one bank account. We won't open 20 bank accounts. But other stuffs like assets, they will have independent accounts. Okay, you see, you have office equipment is one asset. Your computer is one asset. Okay, your creditors will be another asset. Another account. Okay, so we'll have independent accounts open everywhere. Because every time we analyze, we have to determine whether it's an asset, as a liability, or it's a capital. So far, can you all follow before I move on to the next thing? Okay, Debbie should be able to follow because she has accounting knowledge. So others, Eric, can you all follow? I have to ask you all this because I'm worried that, suddenly if you don't understand, then I'm like just going on, This is just the basic concept I want you all to follow, how the account is being prepared. Okay, hold on. Someone is... Okay, all right, fine, good. Okay, so next will be, I'm going to go to another sample of asset. Then you'll be wondering, you already told us about the asset, the first one. This transaction asset is actually related to the bank. Okay, but not all the time you are going to prepare a check. Am I right? Not all sole proprietors have a check. Okay, checkbook. So you might also buy furnitures in terms of cash, right? So then you'll ask me, oh, I'm buying things in cash. Is it okay or not? You can buy things in cash because sometimes not everything you need to go to the bank and do online transaction, or every time you can actually tie out a check and give. As a sole proprietor, you are allowed to do cash. But of course, like Eric and all that, they are company directors. Very rare you use cash because income tax very particular of companies using cash transaction. They don't really encourage you to do that because companies, they have huge amount of transaction, voluminous transaction. When you do cash, they find something very fishy. So Senior Berhad, don't do that. Everything has to be online, has to be checked. No cash transaction. Sole proprietors, the law still permits us to do because you still have small amount of cash transfer. You still can recon that amount. Okay, so now we apparently purchased an asset. Okay, so let's say we purchased the asset in cash. So what will happen is I still have a furniture debit and a cash credit. That is my journal because now it's involving cash, it's not involving a bank. So what will be my posting ledger entries will be, I'll open up a furniture account, I'll debit my cash, I'll open up a cash, I will actually credit my furniture account. So you see now it's cash and it's my asset. Just now was bank and it was my computer. Okay, so this is a sample of asset purchased in cash. Okay, so capital. Okay, what do you think capital is all about? What is the lame definition of capital? I'm sure all of you all know what is capital, right? What is the most easiest definition of capital? Capital is investment made on your side, right? Okay, you know when you open a bank account, right? Definitely the 1,000 is your capital. You're not going to take the money out lah. I mean, anyway, it's up to you. It's your money. You can put it in or you can check it out. So capital always belongs to the company. Okay, capital is actually, we don't call it as an asset, neither do we call it as a liability. So it's like something that you are giving it to the company. It also belongs to yourself, but it's also owed by the company back to you. You see, so that is the most easiest definition I can give you. So capital is a standalone account. Capital will not share any other accounts with all your assets and our creditors and no debtors and all these things. No. Okay. So capital, you see, for example, as an owner, a business owner, I deposited 35,000 into my business bank account. So this one will open a bank because definitely capital you will deposit into your bank, and then we will open something called capital account. Okay, so the corresponding ledger posting will be bank. Okay, the same bank account we will actually put in. This time will be on the other side. Okay, same thing, capital, we will credit our bank. Okay, so for capital, it's a standalone account. You can see later I will show you where is your capital stated or located in your financial statement. It is not an asset, it is not a liability actually. It's a standalone. To make it more easier to be explained, it's a standalone account because anytime you can take the money, you can leave the money alone there itself. All right. Okay. Another example I would like to share is expenses. You have a lot of expenses. Then you'll ask me, okay, utilities expenses, telephone, upkeep of motor vehicle, all these expenses you will incur in your business. So for example, I took a transaction in your bank statement. I saw amount paid to rent by check. Maybe you use check, okay? Or you use online transaction. You can use bank account because rent, you will just open a rent expense. You'll open a bank account. The same bank account, you'll do a posting of ledger. So you will realize at the end of the day, right, your bank account will have a lot of the items at your debit and your credit side, depending on all the transaction that we have compiled from January to 31st of December. So this is how we actually analyze each and every account from your bank statement. So we'll have couple of accounts, but bank account will be one, capital account will be one, but we'll have assets, separate accounts, okay, cash, a separate account, creditors, debtors. Debtors, you know who, right? Debtors are people that we owe. Creditors are people who owe, creditors are people that we owe. That means we need to pay them back. Debtors are people who actually owes us money back. So we call that as accounts receivable. Creditors are accounts payable. It means we need to pay out. Debtors, we need to receive. So all this will have separate accounts in our ledgers. All right? Can you all follow? Can you all see the flow of it, that how it actually how the accounting is actually being done, how the posting is done, how the ledger entries are actually derived from before we actually go into the financial statement preparation? Can follow all of you all? Suddenly all silent already now, so I don't know whether you all are okay or not. Hello. I know it's a Sunday, evening. Then then suddenly I scared you all tertidur ke apa ke. Can Okay, if you have any question, please ask. Mr. Kumara, are you okay? Is everything okay? Can you follow?
Following, having my
Okay.
lunch together.
Okay, no problem. Yeah, you can have your lunch, everything, no problem. It's just that I'm just worried that, if you go suddenly pin drop silence, right? Like I say, I cannot see you guys. So I need to know whether you can understand. Are you following me or not? Okay, Mel, okay, huh? So I hope all of you all okay.
But a lot of paperwork, lah.
Sorry?
A lot of paperwork.
Yeah, a lot of paperwork. A lot of paperwork. That's why I said this is not your job. You can't do this because you don't have time for all this, and you must not have knowledge to do accounts.
Yeah.
So this, leave it to your accountant. Please don't go and do this. You got no time for all this lah. You have to focus on your business. Can hire accountant like her, it seems. We have a whole team doing this in my office.
Finish. Today you out of job.
No lah, we have a lot of clients lah. Trust me. Accounts tak cukup lah. Memang tak cukup. The whole team is like, already suffocating and, already doing this, doing that. So we have a team managing accounts alone, a team managing audit alone, and secretary. But you see, the cost is actually going up because you see there's a lot of paperwork to be done, a lot of things to be looked into. Because my clients, what we do is we do accounts and also tax planning together. So they always prefer to come to us because we are a combination in service. Because you see, an accountant will prepare for your accounts. Yes, she will book in everything. But when it comes to tax, she will not be able to do tax planning for you. That is not her forte because hers, she will definitely pick up all your accounts. She'll do a super perfect accounts for you, everything fine. But clients, at the end of the day, when you make a profit, you want tax planning because not everybody wants to pay high amount of tax, but I would say we will pay a justifiable amount of tax. So we need to do tax planning. That's why my clients, when they come to us, we do the accounts, we do their tax, because accounts and tax have to be hand in hand. So that's the thing. So especially when sole proprietors and companies, when they want to apply for loan, right? Okay, when they want to apply for loan, they need to do some adjustment. They need to have a very healthy balance sheet, financial statement, right? So you need to appoint a tax agent because she will actually have to go through, evaluate your financial statement, and give you the pointers for adjustment in order for you to get the approval. See, that's where the tax agent will come in, to do the final part for you. So memang a lot of paperwork, and then, professional fees also is there. So people will actually look into. But sometimes, you think that you want to save and then you end up getting penalized and then you come also, it's too late. So that's another, consequences of it lah. Okay. So now we will move on after the asset is actually capital. I've done with the capital already. Expenses also I've taught you already. Okay. Wait, before we go to the trial balance, is there any questions that you want to ask pertaining this? So I assume that you understand the flow of it lah. Okay. So now now we have actually captured all the accounts. Okay. So the next question you ask me, oh, why are we opening all these accounts for what? What purpose does it actually serve? Okay. So can you look at this trial balance? Okay. So this will be the first check made of the accountant to know whether the accounts has balanced. This is not your financial statement yet. We haven't prepared your financial statement. This is actually the compilation of all the transaction of your debit and credit, of analyzing of all your expenses and income in your bank statement with all the accounts. Do you remember the accounts I picked up just now? Rent, bank account, capital account, and then furniture, cash, all this. Okay. So all these accounts will come into this. Can you see this figure here? 39,100, 39,100. Okay, this is where after you have actually done all this posting of ledger entries, right, the accountant will come to this to check. This is actually a check balance for her. She need to check this trial balance. It has to balance. If there is no balance here, then some transaction has actually gone wrong. Some posting has gone wrong. So she has to go back again and recheck all this back again. Normally, you don't get to see the trial balance. We don't disclose trial balance to client because that is not part of the financial statement. It is actually part of the accounting process. It's like a checker for us. So you will not see this trial balance. That is the reason this is not part of the financial statement. Only on corporate cases, yes, we do give trial balance, but sometimes directors don't understand that. So there's no purpose of giving them the trial balance. So this will be the first skeleton to check whether all our posting are in place, our ledgers are picked up properly, and we will have to get this before we go to our financial statements. Okay, so ladies, do you all want to have a 10 minutes break before I actually go into the financial statements to teach you all how to, read that?
Yeah, I think that'll be good.
Yeah,
But just before that, just one quick question.
sure.
What are the expenses that we can put in as a cost? Like,
Don't worry. I'll go there. I've got one session for that alone.
okay, that's very important because
Yeah, that's very important. I've got one session for that alone. So that's why I just want to give you all a 10 minutes break before we go, and then I will actually show you all that expenses session.
okay, we take a break now.
Okay, yeah, are y'all okay for y'all? Because I don't want to, put too much of things first. So we absorb this, get a 10 minutes break, then we'll come back again. So now it's like by 30 to 35. Is that okay? Okay, just a 10 minutes. All right? Okay. Okay, are we all in already?
Yep, I'm in.
Okay. Okay, wait, hold on. Okay, all right, so I will start. Okay, all right. Okay, so now we're going to look into the financial statement. Okay, financial statement basically I'm referring to, one is the profit and loss account, and the other one is actually the balance sheet. Okay, these are the two main things that I will actually run you through on how to actually look at the figures and why are those figures important to us. Okay, when you look at profit and loss account, right? Okay, if you look at it, it says that statement of profit and loss account for the year ended 31st of December 2020. When I say for the year ended 31st of December, right? Basically, this statement is actually showing you or reflecting you that the performance of the company for the whole entire 12 months. So whether you actually literally made a loss, were you able to actually sustain the business, or were you actually making profit for the whole year? That means the performance of the business for the whole year. So the important component in this profit and loss account is actually listed here. Okay, so I'm going to explain to you one by one. Okay, so when I say sales, I'm looking at the gross revenue. That means the revenue that comes into your business bank account. Okay, that's pretty much straightforward lah. Yeah, whatever revenue that you bill is going to come into. If you receive, that is your revenue for the year. Okay, so that will be your sales component. Okay, what do you mean as cost of sales? Okay, can anybody explain what is cost of sales? What do you understand of cost of sales? I'm sure you would have seen this financial statement. Everybody would have seen this financial statement. So we asked Debbie lah, since Debbie, she's an accounting person, so definitely she will know. Debbie, do you want to explain what cost of sales are? I hope she's already in. Is she in? Okay. Or either Mel. Mel, have you heard what is cost of sales?
Yes. From my understanding, is the cost incurred during the selling process. Is that right?
Okay, you are not wrong. You're somewhere around there.
Mm.
Okay, if you say cost of sale is cost incurred in the selling process, so how about all these operating expenses and all these things?
Good question. I do not know how to answer.
You are there. I mean, you got I would say 40% of the answer is there. Okay, so we need the balance 60. So okay, Debbie is there. Okay, Debbie, would you want to explain what cost of sales? When you say cost of sales, right? So how do you explain what is cost of sales? Okay, she says cost required to manufacture or purchase a product. Okay, all right. Anybody else? One more try. I just want to understand what is your definition of cost of sales.
Cost of goods plus overheads.
Cost of overheads. Okay, it's very general actually. Not really accurate. Okay, cost of sales in a layman term is actually cost that is directly incurred in the production of your income. That means 80% of your cost is actually related to your income. Without this particular cost, right, you will not be able to run the whole business. Because you see, cost, we have many segregation of costs. We have operating costs, we have admin costs, we have, all kinds of manufacturing costs. But cost of sales, you see there's a difference between this cost sitting up here and this cost sitting here. So cost of sales is actually 80% of the cost is attributable in the production of your income. Cost of sales compromises components of your opening inventories. Okay, that means let's say if you're selling a good at the beginning of your operation at 1st January 2020, right, you will have a sum of opening inventories in your hand. Okay, then during the year you will purchase some of the additional inventories. Okay, so these are all your cost, because if you don't have your inventories, right, you cannot run your business. Of course, this doesn't apply for services. Like we're talking about trading companies, online, stockists who buy all the stocks. Okay, so this 80% of your cash is tied in your cost of sales, because without this you cannot run. So you need to purchase the items. For example, if you're selling Asing Acu Kicap Enterprise, he sells ketchup bottles. Okay, so I don't know whether you call it ketchup or ketchup bottles. Okay. So what is his cost? 80% of his cost is actually the ingredients to produce this ketchup, and also the bottles. Means without this manufacturing of these bottles, he cannot actually have this business. You must have the ketchup, which is already done, everything, materials for the ketchup, ingredients for the ketchup, sorry. The material will be the bottle. So this too is actually his cost of sales. So whenever you do a business, right, you need to determine what is your cost of sales. Why you need to determine this, right? Because this cost is very important. It takes 80% of your cash flow. Sometimes you don't know that you actually have a lot of your cash flow being stuck in your inventories. You just buy your stock and you just stock them up there. What happens during this pandemic is you're not able to sell off your stock. So you get stuck. Your inventory is actually held there. Finally, it becomes obsolete and you're not able to sell. Your cash all is stuck there. So this cost of sale has to be managed. It's actually your inventories. Your purchases are referring to your 80% cost that is attributable to your business. So different businesses has different direct costs. Okay, we'll take an example. So Mel, what is your business all about, and what do you think is your direct cost or would be your direct cost?
Guess mine, because it's purely service related.
Okay,
So
right.
my costs will be like, for example, rent for a space,
Okay,
the utilities, because mine is a lot of online services, so like the electricity bills,
okay. Well, just recap to me what you see. Rent, utilities will not be your cost of sales. Okay,
okay.
rent and utility will be your operating expenses.
Okay.
That is your OPEX expenses. Okay. Your direct expense will be, okay, let me run through this with you. Okay. So when you say services, can you explain to me what services do you give? Sorry.
Okay, so I provide individual sessions.
Sorry.
Can you hear me?
Yeah, come again, girl. Sorry, I didn't hear you just now.
Yeah, but let me just wear my earphones, that'll be better. Kejap.
Okay.
Okay, can you hear me?
Yeah, now loud.
Yes, I was just listening through the loudspeaker. So my sessions are online, on individual one-on-one sessions. I am a counselor. I'm a counseling psychologist, coach, and healer.
I see. Okay.
So basically, if talk about cost of sales, in my mind would be like the marketing costs.
Okay. No, even that is actually under your OPEX. Okay, what would be your actual cost of sale, right? Because you are a healer, right? So
Yes.
you will need to actually get yourself registered, right? Definitely
Yes.
be a registered counselor or a registered therapist. And
Yes.
then you need to actually retrieve, those materials from all those websites, and you need to actually upgrade yourself, right? Because
Yes.
you need to be certified in order for you to provide those services.
Yes.
So those are actually your direct costs.
Oh, okay.
That is attributable to your core business. Rent, utilities, it's your operating, because you see, without your rent and utilities, right, you still can run your business. Because you
Yes.
just need online, you pay online subscription. Now Zoom and all these things is just operating. But in order for you to deliver, right, if you are not a certified healer or certified practitioner, right, definitely you can't go and do all this, right? You're not
True.
able to deliver all this because you need to be certified and people will look up for that.
Yeah.
So, and when you attend your courses in relation to this, those to equip yourself with those knowledge and capabilities, so those will be your direct costs. Because without all this, right, like see for example, I'm a tax agent. If I don't have a tax agent license, right, I don't think I can run my firm,
True.
right? So I can pay rent, I can pay utilities, I can operate, but what am I operating on? So 80% of your cost of sales must be attributable to your direct production of your direct revenue.
Okay.
Okay, so that is what cost of sales all about. So why I put opening inventories, because Mel is doing services like me. Okay, let's say if you take a training industry, when you take a training industry, you are actually training. So what is their direct cost is trainer fee, exam fees, when we pay to these bodies. So when we pay to overseas bodies, that is actually their attributable cost of sales. Why I'm explaining to this, you need to actually know as a business owner, where is my cash being parked? You need to plan them carefully. So people don't understand. They say that, oh, this is my cost of sales, that is my operating cost. No, actually, they don't really understand what is cost of sales, what is operating. You don't know unless people explain to you. So cost of sale is what actually takes up 80% of your cost. Like Mr. Kumara said just now, overhead. No, overhead is not. Overhead is still under your operating, because overhead, whether you like it or don't like it, is still going to be there. But without the overhead also, you still can go. But what are you running? What is your business? For example, if you are actually selling jewelries, without gold, okay, without the purchase of gold, you can't do anything. So that will be the cost. That will only be your cost of sale. That's all. There's nothing more than that. So different industries have different, ways of analyzing their cost of sales. So you need to know what is your cost of sales, because you need to plan later. Okay, so that is attributable to your cost of sales. If you have trading, then you will have an opening inventory, you will have your purchases during the year, and you will have a closing inventories. What do you mean by opening inventories and closing inventories, right? Because we will actually do a stock take. The beginning of the year, we will find the value of the inventories, and the end of the year, we will actually have the closing value of the inventory. So we will know how much has been used up already along the year. So that is when you see, you will actually get after you take out the closing inventories, everything, you will actually get this figure here. Okay, this is actually where your cash will be held up at your cost of sales here. After you have actually minus out, you will get a gross profit, because of course you are not going to be taxed on your gross sales. Okay, this is your gross sales. Okay, now we are calculating your gross profit. That means, of course, you're going to tell me that, oh, you can't tax me on 170,000. That is my gross sales. I haven't even attributed it to all my other cost. So the first cost you will do is your cost of sales. Then you will get a gross profit. But you still tell me, oh, Tilas, it's only my gross profit, but what about my other expenses? What are my operating expenses? What are the other advertising expenses? All that will actually come under operating expenses. Actually, you have many categories. I will explain to you in the upcoming slide. This is an additional slide that I put in because I realized many entrepreneurs keep asking the same question, that what are the expenses that are deductible and what are the expenses are non-deductible. So I will explain that in my next slide. Okay. So here, after you have taken out your operating expenses, your final figure will be your net profit. Okay. So you'll get a net profit. Okay. Once you're getting a net profit, that is the figure that we will use to actually tax. That is the figure that we will be actually taxing on at the end of the day. The net profit is the figure that we will be taxing on. So basically, the profit and loss will show you what was your performance during the 12 months. That means for the whole 12 months, this was what you performed. This was your total sales. This was your cost. That means you can actually use this to calculate how much a percentage has gone to your cost of sales. And a minor portion will only go to your operating expenses, because nothing much in operating expenses. And thereafter, we will actually derive at our net profit. This is the net profit that we will actually tax on. This is what we actually use for our computation. This is the financial statement that we will use for your computation. Okay. If you move on to your balance sheet, this is your second financial statement. Okay. If you look at your balance sheet, it says that statement of financial position as at 31st of December. What is the difference between this and this? Here it says profit and loss for the year ended 31st December. This is financial position as at, which means basically the balance sheet doesn't reflect you the performance for the 12 months. It's actually at the 31st of December, that means the last day of the company, of the basis period, it is actually reflecting the financial assessment of your company. For example, if somebody wants to come and buy over your company, how do you assess your company? What is the value of your company as at 31st December 2020? You know, that is the reason the balance sheet is being prepared. So what is the balance sheet all about? It actually reflects the financial strength of the business. When a banker wants to provide you a loan, right? This is the balance sheet. This is the financial statement that they will actually look at before they approve your loan. They won't look at this. This is just the profit you made for the year. That particular year, you could have made a loss. So this will not assess your loan. So every time a client comes to us, whenever we do the accounts and we want to finalize their tax right for submission, we always have a chat with the bankers because they would want to have a strong balance sheet being prepared on behalf of the client. So what are the components and how do the bankers, or how you are supposed to actually analyze this balance sheet is like, for example, look at the non-current assets. When you look at the non-current assets, okay, what do you mean by non-current asset actually? What do you think that you understand when you look at it? When you look at this balance sheet, right? Have you all actually had a look at this balance sheet? Have any of you have actually seen this balance sheet? Just a glance or what? Any? I'm sure someone would have had a look, right? Okay, Eric, maybe I'm sure you would have seen. Mel, maybe now you would have seen a balance sheet in your first round of submission for 2019 if you would have hired an accountant to do. So what do you understand with non-current assets? Debbie, do you want to try to explain this? It's better that you all explain last, so at least I know that you all are, there. What is the most simplest layman term to explain non-current assets? I don't know whether she's there. Debbie, are you there? Okay, I'll explain to you lah. Okay, non-current asset, okay, I think she's here. Yeah, okay, Debbie, do you want to explain to them what is non-current asset?
Assets that are, how do I say, it cannot be easily converted to cash.
Yes, exactly. Okay, you see, when you say non-current asset, right, we are talking about physical assets that are placed. Okay, it's not easily convertible into cash. Okay, so if you look at it, you have premises, which is land. Then we could have buildings, we have motor vehicles, we have machineries, we have equipments, medical equipments, and then we can also have these big cranes. If you're in a construction business, so those are all non-current assets. That means they are non-movable items actually. Okay, and they are not easily convertible into cash. So you call them as non-current assets. Okay, normally these non-current assets, they have very high value for the company. Okay, sometimes you also have something called intangible assets. Okay, that means you can't touch them. Okay, tangible assets that you can touch. Intangible assets are called goodwill, patent. Okay, those are all actually under the category of non-current assets. Okay, those are all those who carry heavy value to the company. Okay, so you can't convert them into cash in just a couple of days like that. It will take some time. So those are non-current assets. Okay, when you talk about current assets, right, they are all assets that are convertible into cash in the near future. You can just get it done, especially inventories. You just resell your inventories, you get cash. Accounts receivable basically refers to your debtors. Whoever owes you, you just tell them that, look, I'm selling my company, or my company is going for a valuation. Thereafter we are going to just hand it over to investors. So you just collect back your accounts receivables. Okay. Bank, merely I'm referring to the amount that is sitting down in your bank statement. Okay. So these are all easily convertible into cash. You know roughly what is the value of it. So your balance sheet will consist of your non-current asset plus your current asset. So you see the figure here, 313. This is your asset column. Okay. If you go to your next column, remember I told you just now owner's capital. I told you it doesn't fall. Actually, it is a form of liability, but we don't put it under liabilities. It's a separate header by itself. It's called owner's capital. Okay. So you look at it, there's an owner capital here of 80,000. Okay. Do you remember that we had a net profit of 20,000? Sorry. Here is 22,000 here. So this net profit will be parked here. Okay. But there is something called drawings, I have lesser drawings here. So any of you all are aware what drawings are all about? Okay. I need to emphasize this. If you are a sole proprietor, please remember you are not allowed to draw a salary from your company. Okay. You are not allowed to draw a salary. So the next question you'll ask me, so how do I take out money from my company for my own usage? You can call it as drawings. Every time you draw cash from your company is actually drawings to you. So that drawings will be actually parked here. So basically when you do a valuation, right, you have your capital here, you have the net profit that you made during the year, and this will have to minus out the drawings that you have taken during the year. So that will be left of this balance that is left there for your company as at 31st of December, because during the year you would have actually deducted this and you had only this balance. So the owner's capital, you only have this much that is actually left down there, adding on to the profit during the year. So this will be your bank balance there, will be in your enterprise there. Okay, that's why I say the capital is a standalone account, because what is there, it is added on to the profit during the year. You will knock off all the drawings. Every time what happens to an entrepreneur is, I see that the accountants, obviously this it's not their responsibility to tell you this, but the thing is when it comes to the tax perspective, right, you cannot put there something called salary. Of course, when you take out, the accountant will park it as salary paid to you, because it's not wrong on her side, because it is something that you're taking out as a monthly basis. But by right, you need to actually change that to drawings. When it comes to the tax adjustment, it cannot be called as salary, because we cannot categorize that as salary. You cannot withdraw a salary from your own company and we can't claim that as an expense. So that will basically be transferred as your drawings into your balance sheet. So this always happens.
Minus off from the capital that we have put up earlier?
Yes. Yes. Because what happens, right, always whenever I get a taxpayer, right, I see some salaries being parked as an expense and submitted. It is wrong. The income tax will come back to you and fine you on that. Because what will happen is, by right, the correct computation is you need to tax back the salary to yourself, because you are legally the owner. As an accountant, what she's done is not wrong, because for her, she will see the money has been transferred to you on a monthly basis. She'll park it as an expense there, saying salary paid to her. This has happened many times. So I'm just trying to say, you as an owner, when you do your tax returns, you need to actually identify this and inform the accountant that, look, this is not my salary, it's a drawings taken by me, used for this or whatever is it, or you just want to leave it as drawings. She will transfer it to the drawings account. Okay, so this is the owner's capital. Then we'll move on to non-current liabilities. When I say non-current liabilities, basically I'm referring to long-term loan. Okay, when I say long-term loan means, right, these are debt due within 24 months. That means after 24 months you have to pay. Okay, that means you have a 2 years old loan. So that is a long-term loan. If it's below 12 months, you still call it as a current liabilities. So current liabilities are those like, the creditors, you have 30 days, 60 days, 90 days. Those are creditors. That means it's a debt owing to them that you need to pay in 30 days. So this will be your component of your creditors here. Okay, so you look at it, this section will actually reflect your total assets. And this will actually reflect your total liabilities plus your capital. Can you see this 313? Remember, does this come back to the same equation I taught you just now? Asset is equals to liability plus capital. This is basically your accounting equation. Okay. Why does the banker look at this is he will actually analyze what will happen if the company is not able to pay back, or the company is in a bankruptcy, or actually there's a voluntary liquidation on the company. What will happen to the repayment of the bank? So what the bankers will look at, they will look at this portion. They want to know what is the actual value of this, and they will also analyze this. Actually, their concern is not much of this. Their concern is much of this. What is the loan bearing for the company along the year for this? Because just in case you are not able to refinance back or repay back their loan, they will need to actually convert this and pay off all this, even before they actually take over whatever is left as a repayment to them. Okay, same thing, the investors. Investors, if they want to actually invest in your company and if they want to look at the value of your company, they will actually look at this assets and also your liabilities plus your capital. Your owner's capital is 80,000. You are not going to withdraw that. It actually belongs to the company. Along of the profit that was made, of course, you have to minus out all this because these are all your own personal cash taken into account. So this particular movement here will have to subsidize whatever that comes from here. So basically, the bank is not just giving you a loan looking at, oh, okay, you have done very well. Your profit is, your profit is very high here. No, this particular profit and loss is actually not really valid for them. They are more concerned on this financial statement. So whenever even you want to have to apply for a loan or any SME, aids and all these things right now, they have a lot of SME Penjana Kerja loans out there for all these small business entrepreneurs, women entrepreneurs. There's a lot. This seed is giving, and then they have got a few more, like I can't remember. Everybody is actually looking into this. They want to see how healthy is your finance, is your company at 31st of December. That means on that day, if you do a valuation on your assets and liabilities, can it sustain? Will it be able to actually repay the bank back? Or whatever loan that you are actually taking. So people always have the misconception telling me that, oh, okay, my profit must be this much profit. They are not concerned about your profit actually. Your profit, because you know why they're not concerned? One year you might do well, the other year you might not do well. So by looking at the profit, you cannot determine a 5-year repayment of loan. Does it make sense? So this is how you read your financial statement. This is very, very important. Is there any questions that you all want to ask me? Hello, are you all here? I'm sure you all want to ask me some questions, right? Okay, somebody's asking me. Wait, who's asking me?
A bit too dry lah.
A bit too dry lah. Okay lah. That one I accept lah, because you see, this is something that you just need to know that when you're applying for a loan, this is the financial statement that they will look at. Actually, when you slowly do your accounts, right, for the first year, the second year, then you will slowly get the hang of your accounts. You will actually look at this part. Now you might not know because I think, Mr. Kumar, you haven't actually really done up your accounts.
Yeah, but
Then-
isn't there a template that you can share that we can just feed in the numbers?
No, this is actually not a template base.
Hmm.
So this is actually, we need to extract it and we need to do it. There's no template because it's not like I think probably you're thinking because it's balancing from, no, it all goes back to the numbers.
Okay.
So you just need to understand the concept and why are we looking at all these values? What is the purpose of all this put at this and something called balance sheet? Because we work with the bankers. So when we do the accounts and tax returns, right, there's a certain amount of value that they will tell us that this is how the company will have to reflect in order to get a 300,000 loan or 500,000 loan. And we have to work according to that to actually, of course, the company has to be also financially healthy lah, because we cannot just cook up anything or create for them, because they need to actually be stable to pay back the repayment. So that's where we work out the tax also for them. So, but as a layman term, what you need to know as a business owner is you need to actually look at this. It's good to have some current assets that is parked under your company. Why not? If you are actually parking it under the company, why not buy assets? I'll explain to you why you need to buy assets. It is actually a tax planning tool as well. Okay? So far, okay? All? Mel, okay? Eric, okay? Debbie should be okay. Are you all okay for me to move on to the next slide? Yeah, of course you will take time to digest smell. One day definitely you cannot digest. Don't worry. I'm like I said, I'm always here. You can always ask me questions. So we'll take one at a time. You just need to know the concept of reading the balance sheet and profit and loss. For y'all will be more of probably now at this stage will be more of knowing this. That means what is your profits, what are your expenses related to it, what, because I'm sure your concern is to know what is my net profit, what is my tax. So that's your concern. So this will not be much of your concern unless later when you apply for a loan, then you'll be thinking that, oh, okay, these are my assets. Okay, how do I look at a file? Look at a healthy balance sheet. Then yes. So we'll go one at a time. Okay. So basically, this is just a summary of the accounting chart before we move on to the expenses, okay? Because I just run you through the source of business documents. Then from there, we went to journal entries, okay? Then we did the posting ledgers. Then remember, we had a trial balance to show you the check balance of the debit and the credit side. And then finally, we prepared the profit and loss and balance sheet for you. So this is actually the summary, or you call it the cycle of the accounting. This is what we do in order to prepare the financial report. Okay. All right. This is something additional I put for you in. Okay. This is a very simple tool of actually planning for your business. Tax, cash flow planning. Okay. If you look at this, right, there's only two components of this cash flow components. One is cash inflow. The other is cash outflow. I've actually put down this. What are the cash inflow items? That means what are the cash that is going out and what are the cash that comes in lab. Okay, you have all this cash. Okay, this is actually a simple statement of cash flow forecast that I often do, but of course this is a very simple version. I'm just showing you something to actually suit your business, because all of y'all are running I assume it's like a small scale business lah. So your basic expenses would be this. You're not in a manufacturing industry or a heavy machinery industry or what. So then the nature of expenses for cash flow items will be different. So these are all basic expenses that you can see I put out here to actually prepare a cash flow for the next 6 months or 12 months to see whether you are actually at a surplus or a deficit at the end of the year. We did this quite a lot for our clients upon request of IRB, okay, because the income tax and the bankers also will request projected cash flow. Have you all done any projected cash flow so far? Have you done, Debbie? Have you prepared for accounting purpose any projected cash flow?
Yes, recently actually.
So what was the purpose you prepared that for? Just for any
Was actually for the board meeting for the shareholders.
Yes. Sometimes you prepare. Yeah, actually you prepare for a board meeting. Mine was more for income tax lah, because they want to assess the financial constraint of the taxpayer. See, when you apply, let's say when you have an audit case, you're not able to repay, so we need to justify to them. So we actually call it as a capital statement. That means it's a little bit tedious than this. This is actually a first stage cash flow process. The other one is we will use our properties and all that and other commitments inside. So that's called a capital statement. So this is actually a projected cash flow. You can prepare a very simple one. Sometimes the bankers will request for this as well. Why is this actually important is actually basically is for this. It's actually a very useful tool for planning. Actually, we use this a lot to plan because in the next 6 months, right, when you plan, right, you will know where your cash is being held. Probably you might be actually thinking that, oh, I think I'm okay to spend on marketing. Then suddenly you realize, let's say you have a focus of the revenue, right? You will realize that, okay, for this much of marketing, right, I only got this much of revenue coming in. So I think I should cut down on my marketing and advertising. So all this component will only come in when you put down your figures. So it is actually a very good planning tool. It gives you also the information on your status of your business. That means, let's say if you think that, okay, do you think I need to ask for financial aid? Or you think you're okay. Let's say you want to buy a plant and machinery moving forward. So do you think you have enough of cash or not to sustain if you have invested in your asset? So it's also a warning lah. That means, okay, in 6 months, you know that, oh gosh, there's no revenue coming inside. How am I going to sustain my expenses? So now itself, you stop in a sense that you go back to your cost of goods and sales and see that, okay, I think, you know what, let's not buy so much stock. We buy on demand or on request. So you see half of your cash will not be tied there. So you know the pattern of it. So actually, if you know how to read the cash flow, a lot of planning can be done, a lot of business planning. We do a lot of business planning for clients, and that has saved a lot of money for them during this pandemic. It also saves at the purpose of loan because sometimes you're not able to do a management account or a profit on a balance sheet because the financial period has not actually ended. Okay, so how do you go to a bank and give them when you want to apply for loan? So they will tell you, never mind, give me your projected cash flow. So the same cash flow investors also will use. They will just tell you that, okay, it's okay. Let me see. Let's say if I'm going to give you invest 50,000 in you. So let me see, is it a cash business or not? So how do you determine that? You have to look at your cash flow. So it actually serves a lot of purpose. If you really know to do the cash flow projection, it actually will serve you a lot of purpose. You can actually increase your revenue. You can cut down on your OPEX expenses, and you can actually plan for your tax. And from your tax itself, you can actually start doing now as well the planning. Okay, these are the things I need to claim. You can even actually come and hit a break-even point for your tax. By the time the 31st of December, you will reach there, you will know what you need to do. So next year, you don't have to choke yourself and think that, okay, this much of tax I have to pay. So you need to do this projection very much earlier. So this tool, if you really know how to use it, right, it's very, very useful. Can follow so far? You just do a basic cash flow projection. It will be really, really very good. Okay, someone has asked something. Okay, I hope everybody can follow. Okay, all right, good, cool. If any questions, just ask lah. Okay, this is the most interesting topic. Okay, I want to move on to this because, of course, all of you are stuck because you still don't know what are the expenses that are deductible. Okay, let me tell you. Like what I told you, for an accountant, all the expenses are actually deductible. It's not wrong. Her point of view is right because she will check up whatever expenses that is actually paid up from the company. It's part of the company expenses. She will take it up for you. But do you think that is the right thing to do during the tax declaration? No. All expenses that are actually claimable, not necessarily tax deductible. Okay, which means expenses normally is actually categorized into two. This is for the tax law. We have revenue expenditure and we have capital expenditures. Okay, so there's only two. I'm going to explain to you. I repeat myself. There's revenue expenditure and there's capital expenditure. So based on this, now we will discuss. Okay, so when you say expenses, right, what are expenses? First thing, we have 5 different category expenses. One is cost related to set up a business entity. Like all of y'all are setting up a business entity for the first time, right? So all those costs That is one category. Okay. Second one, costs related in establishing a business premises. Okay, setting up a business entity and establishing are two different things. Okay, I will share with you the component of example of expenses. Establishing is you are now only buying a building. Okay, then you decided to renovate, or you decided to repair the existing building which is not in a good condition. All those costs related to set up a business entity. Okay, in order for you to have a business, you need to register your business. So your SSM registration. Then let's say if you have an LLP, you need to actually draft a legal agreement. All that is actually cost, the professional fees paid to prepare the draft legal agreement. All that is actually cost to set up a business entity. Related in establishing a business premise is all your renovation. You want to fix your phone line, your internet, you want to add on an extra space to that existing office unit. Then you say that, no, I want to put in some cables, extra cables, so that I can have this CCTV in front, and then I can have my clients in the board room, meeting room. So I need to put in extra Wi-Fi. All these are establishing a business premise. The third thing is costs related to fixed assets and business equipment. What do I mean by fixed asset business equipment is all those assets where you can purchase and park it under the company. So that's very important. I'll teach you. Many people don't know that is also tax planning. You can buy assets under the company's name and use it for, you can use it for yourself as well, but a certain portion will be taxed. Okay, I'll explain to you in depth what are the assets. Okay, the fourth is cost related to marketing and promotion. Okay, all your costs, whatever let's say if you have a booth or you actually run a workshop, and then you rent a space to actually do advertising to promote you have a booth, you rent a booth or canopy, you put on your brochures, you advertise on you pay subscription, advertise on Facebook, you have a web hosting, you open a portal, anything, or you pay a non-resident for any subscription to design your marketing channel or your marketing website. All these costs related to marketing and promotion. The fifth is operating expenses and working capital. Working capital basically it refers to all the loans that you take. Let's say you tell me that, okay, I don't have enough of loans, so I need to take some money to use for working capital. Working capital, there's no specific definition what is the expense. It can be used to actually pay for renovation, or it can be used to actually buy some additional equipment for the office, because you're starting the business, right? So you don't have money. So all this is the investment that you need to do into your business. So there's always, remember, why there is a definition of revenue expenditure, capital expenditure. This one only tax agent will explain to you, because your tax preparer or accountant will not know this, because they will deduct all this, which is not wrong. They are doing their accounts correctly. But when it comes to the tax portion, right, we as tax agent will need to classify these expenses, whether it is tax deductible or it's not tax deductible. So when I say non-recurring, okay, capital, when I say capital revenue expenditure means, right, it is recurring expenditures. That means you will incur it again and again and again. When I say capital expenditure, it's non-recurring expenses. That means you only do it once. Okay, so if you can see my header, it says here, not allowable business expense. I actually put this, layman terms. You'll be wondering why, because I just want you to understand the concept. That's all. Because I know as a business owner, you want to know what is claimable, what is not claimable. Because most of the time, what happens to the taxpayer when they come to me, right, when I see the accounts have been prepared, they are very happy that the profit and loss is actually very, very less. So they'll assume that the tax is going to be less. But they fail to realize that, like what I said, all expenses are actually deducted. But whether it's tax allowable or not, you only need to do it when you calculate tax. So you need to do certain planning even before you actually incur the expenses. That is where the tax agent comes in to help you to do tax planning. Because you see, costs related to setup of a business. I explained to you, LLP, company registration, whatever initial registration you do is capital in nature. These are expenses that is not deductible. So if you see the accounts, they will deduct, but when it comes to tax, right, we will need to tax this back. Okay. Next will be professional legal fee, like what I told you this just now. See, all these are all related to establishing the business premises, setting up the business. All only happens once, right? We don't reoccur this every year, only once at initial. Registration, initial registration, all these expenses are not allowed. Just remember that first time for the first year of your business is not allowed. Costs related to establishing, I told you just now, business permits. Why do I put / location is? For example, you want to build, you don't have an office, so you want to build an office there, or you want to add on your office space there, so you need to renovate. So all those are establishing a business, a PE for you, the permanent place for you to run a business. So all this, and then rental, you need to pay a rental, right? Let's say if you don't have, you're going to rent someone's premise there. Water, electricity, deposits, telephone, internet, installation, all this is not allowed. Okay. And there's something called renovation. Okay. This is something that I want to tell you. Okay. So normally only tax agents will explain to you. If it's possible, tell your renovator not to give you a big lump sum receipt saying that renovation. Okay. Because when it comes to the tax law, you are not allowed to claim renovation because renovation as a lump sum is capital in nature. But repair and maintenance is allowable. So normally what do we advise our client is try to break it down. Tell them to put, okay, maybe you just install the light, okay, and then the small portion renovation. Okay. Down you put that purchase of aircon, installation of aircon, repair, repainting, replacement. So these are the items you can negotiate with your renovator to itemize the bill and give you. Many taxpayers had this issue because they were not advised on this. So when you actually have a bill of renovation, the accountants will take it and put it as renovation. And from the renovation, you don't have a breakdown. So what will happen is we will actually tax the whole item back. Because renovation generally under the tax law is capital in nature. So we are not allowed to do that. So this is another tax planning tool. When you do a renovation, have a friendly conversation with your constructor, a person is constructing it, or your contractors, or your subcon. Tell them to put a breakdown and make sure the wordings, the rewordings of the renovation is done properly. But if your amount is huge, it's a little bit difficult, it's challenging, but you still can break it down. Okay? You still can break it down. So we would advise, it is not illegal to do this, but you need to do it the right way. That means you need to get documents for it because many people do renovation. They just put one whole figure renovation, 300,000, 200,000 like that. But the whole expenses is not claimable. They're not aware of it because the tax accounts is claimable. Tax is not claimable because it's capital in nature. Unless you park it in the balance sheet. But most of the time, you don't park it in the balance sheet. You put it under the P&L. So it's not claimable. Okay? So
I have a question.
Yeah.
Regarding the renovation, how about if we ask the contractors to give us receipts for the renovation, like how you said, how about the dates? Do we ask them to put dates with gaps between, or
no, it's okay.
The same date's fine.
It's okay about the dates. You see, when we engage a contractor, right? Not necessary. Sometimes the contractors will give you a one-off big lump sum invoice, right? So it's okay, they can break it down. Or if you think the invoice is too huge or too big, then maybe you need to get a few invoices.
Oh, okay.
But the dates so far is not an issue lah. It's not an issue because now we are looking at the figures and the narration because Of course, you cannot come and tell me repair and replacement 150,000. That doesn't make sense, right? Because you don't repair and replace anything for 150,000. So that is definitely an element of question there that it would have been a renovation. So you need to actually know how to place the words.
Okay, understand.
So because you see, like for us, we have a tax law and we have a specific access to a system where we have a definition, a variety of definition of renovation. So normally my clients, I'm quite tactful with them because I advise them. So I will tell them in advance, look, this is how the invoice is supposed to be, so that you are able to claim. Of course, in the tax law, it's written there lah, what is claimable and what is not claimable. So if it's purely renovation, I'm sorry, you cannot do anything. But in renovation itself, you have different phases, you see. So if you can break down the phases, then you will be able to claim them. Because why I'm talking renovation is very huge cost. Nobody is going to spend renovation for 10,000, 4,000 or 3,000, because sometimes renovation is very huge, and then the business owners feel the hit of it, that oh my god, I can't claim, it's part of my business. So this is also one of the tax planning tools that I'm explaining what you can do about it. So if you want to know more, then you must see me off the site lah. Okay lah, no lah, nothing illegal lah. Everything is legal only. What I'm telling you is in compliance with the tax law. Okay. So now we talk about operating expenses. Operating expenses is revenue in nature. Okay, because these are expenses that is allowable. Basically, it's 100% incurred in the due course of the production of your income. So it can be anything: stocks, inventory, salary, wages, EPF, so all these are incurred in the production of the business. I put miscellaneous because everybody has got different nature of business. You have different nature of expenses. If your expenses are something related to your business, yes, but not private in nature. Please remember that. See, if there's a summary that I put here. Okay, sorry. This is actually a summary just to show you that basically what I'm trying to tell you is allowable expenses are incurred in the production of income. Example is EPF payment, rental, because all these are actually incurred. If you don't furnish your interest on the business, you don't have a loan. You can't run your business. You have to pay rental for business. So all these repair of permits, vehicles are used in business, not private. These are all doesn't belong to your name. It all must be under the company. So basically, the summary says that allowable expenses are here. Disallowable expenses are those personal expenses, which is accommodation benefits. Like say you go to a hotel, you can't charge it to the company unless it is related to your business, and you need to check. You need to verify this with your tax agent first. Okay, expenses are very peculiar because we need to know how do we analyze these expenses. Because like what I said, if you give it to the accountant, she will do a good job. She will take all expenses, because for her, of course, it's an expense. She wouldn't know the tax point of view. Our tax laws keep changing, and our income tax is very edgy over it. Every expense they scrutinize. So accommodation, benefit, then you might come and argue with me. No, my business is not. Yes, of course. What do I normally do is I sit down with my clients and I will analyze. I will tell them, okay, fine, this is what we can do, this is what we can't do, or maybe we can work out something like this. So that is personal expenses. Purchases of personal assets, personal motor vehicle, motor cars, whatever you buy under your name is personal. It cannot be claimed under the company. Okay. Initial expenses, like what I've said, expenditures on incorporation of business ventures. For example, you apart from your business, let's say you incorporate another person, a new venture, a new agreement, a new joint venture of business, a new investment in another business, all the expenses related to that is not allowed.
Hi.
Just a summary. Yeah, go ahead.
Example like internet services, petrol, touch and go, and all this stuff. I think are those allowed?
Yes. Okay. So when you say petrol claim, internet claim, utilities. Okay, utilities, it very much depends on your business. Okay. So we go back to your nature of business. If you have a shop lot and you have it, then yes, utilities 100% have to claim. Okay. Internet, if your nature of job, like Melanie, she has to use internet. Mel has to use internet. Without internet, she cannot. Okay. So hers, yes. Yours will depend. Let's say if you're selling jewels, right? They will question you, what is internet got to do with jewelry? You have a physical shop. So I would suggest you claim the internet under your personal relief.
Okay.
Okay. So basically what I do for my clients is I will actually help them to segregate the expenses. This goes for this goes for this. So when I do my tax planning, of course, my final intention is to do a justifiable tax framework for the client. So we will advise what needs to be claimed and where to claim it. Wait, something we could have just, okay. I will show you about the petrol claim of your question in the next slide. Then you will have a better view of petrol claim.
So
Okay.
buying of a printer for business purposes.
Buying a what? Sorry.
A printer.
Can. Printer can.
Can.
Fixed assets can. Not an issue at all. The fixed asset, your petrol, your motor vehicle, I'll explain to you in the tax framework, because there I will show you what can be claimed, what is taxable. So these are the basic expenses which you need to know. Okay. In this summary, basically, you just remember what is incurred in the due course of your business is allowable. What is personal is definitely not allowable. And expenses, two categories. One is capital nature, the other one is revenue in nature. Okay?
Okay.
So far, follow?
Yeah.
Of course, you will have questions on your other business expenses. You can ask me, no problem. Okay?
Okay.
So, okay, all right. Do you remember just now I told you all that I would want to show you the tax bracket and when you need to decide? Why I put it here is because I'm going to explain to you about the computation later. Okay, so if you look at it, this is our basic tax chargeable income bracket. So you remember like what I told you, if you are actually hitting around 50 to 70,000 chargeable income, your tax is already at 16% already. So this is where you need to determine actually whether you need to move from your individual or you need to go to a company. And you have to see first, for the first 3 years, how are you performing? Because what we want to do here is we want to do tax savings. At the same time, keeping your operation costs low. So this is the individual bracket. So if you want to ask me a question, how do I know? You look at this bracket. Which bracket do you think you are going to fall in the next 2 years? If you think that you're actually going to touch, you're already touching 100,000, right? 100,000, for example, 100,000 for 2 years already. Then I would suggest move to a Senan Berhad if you're able to absorb the compliance costs. If you think that, no, I think I'm not stable yet, maybe this 2 years was okay, the following year not, give it another year. So these are all the items that has to be questioned before you even move to an incorporation of Senan Berhad. Let's say you don't want Senan Berhad, okay? You said, I don't want Senan Berhad, it's not a requirement for my business industry. Then you can move on to LLP. Because LLP will still give you the same benefit of the 17%. You don't have to have any compliance, but tax agent is a compliance. That one you need to submit. That one you just get a tax agent. She'll do the tax computation for you, check everything. What normally I do is I offer additional services in a sense that I don't charge them for that. I just go through their draft of legal agreement and then their profit and loss account, balance sheet, and we do a computation because that is like a company submission for them.
Just a quick one.
Yeah, sure.
Assuming, as you know, I'm also a wage earner. So should I be looking at it as in total, anything more than 500,000, I should be a LLP?
No, it depends on your business nature. So if you are an agent, means you're an insurance agent, is it?
No, I'm a wage earner. So I'm being employed actually.
Okay, no.
No.
Your employment doesn't come inside this.
Okay.
It's purely business income.
Okay.
Employment income doesn't collide into this. It's purely business income. The submission is a pool of combination.
Okay.
But the chargeable, you have to actually look, this is how we do the planning. we will actually put your employment income aside. Okay. Then we will look at your business income. Let's say if you have 2-3 incomes together, I will normally pull it up. I will compute a tax for that separately.
Okay.
Then I will do a combination and I will advise you. I'll tell you, okay, I think if you do this much you will save. If you do this much you will save. So those are the things that we will do. Then we will decide whether is it best to move forward or is it best to just stay there first and monitor the business.
Okay.
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 All right. So this is how okay. So what I'm going to do now is, right, this is a very basic computation. Okay. You guys can have a look, but just don't click any pictures on this because these are actually real figures. The reason why it's just that my client's name is not here. That's all. The reason why I put figures, I don't believe in putting XX because you wouldn't understand. So I want to show you this is a straightforward employment income calculation. Okay, you're working in a company, so you have an EA, then you have your reliefs, you minus out. Okay, special relief, you know lah, that particular 2 years they gave. PCB, you all know, is a monthly tax deduction. Very straightforward. The company will deduct for you. So this is not your concern. Okay, your concern is computing business income. Okay, so you see, how does a business income being computed is you're a sole proprietor, right? Okay, so your profit and loss figure, remember your net profit will be here. Okay, you remember our P&L. Okay, I got to show you because oh, sorry, I think I missed out this slide. Wait, hold on. Wait, before I go there, wait, hold on. Sorry, I missed out this slide. Okay. Okay, it's actually, I'm going into tax frame. I want to show you a chargeable income just now. Okay. Okay. So before we go there, I just want you all to know, you all are aware, right? These are all the chargeable incomes. If you receive all this income, you are actually taxable. All this has to go into your declaration lah. So hopefully you all know all this has to, be reported lah. Okay. So this one I no need to explain a lot. Okay. Tax relief. Actually, we can go. Okay, I can explain this first lah to you all. Okay. Tax relief. Okay. How many of y'all utilize all the tax relief here?
Not all.
Not all. Okay. You see, I've highlighted some in red. Okay. I just want to bring to your attention. Are you all aware about medical expenses incurred for parent or not? Okay. This has been there all the time. But you know, right? If you want to claim 5,000, you need to have receipts.
Yeah.
Okay. You must have receipts. What if you don't have receipts? Can you still claim or not?
Can. 1.5, is it?
All right. So you look at this. Parental care, maximum 1,000 per parent. That is actually one parent. You have 2, you can claim 3,000. But this is subject to some criteria. Okay. Why I'm explaining this relief is because this is also your tax planning. Okay. Even before the year end, what I normally do is I will just roughly compute my income and I will try to actually utilize all these reliefs. Okay. If your parent is actually above 60 years old and he's not receiving any income more than 24,000 per annum, you can claim. If your sisters or siblings are claiming, you just share with them and claim. You still can claim, not an issue. Okay. So if let's say you don't have bills for 5,000, right? Many people forget to actually claim this, you can still claim the 3,000 if both your parents are around lah. And let's say if it's shared portion, you can share with all your siblings.
If one person is a pensioner, so I cannot.
You must see the pension, whether it exceeds or not. There is certain criteria for that. Later I'll share with you. I'll go through the website and let you know what is the pension amount.
Okay.
Okay?
All right.
So the next is lifestyle. Lifestyle is something that was given during the COVID. We existing have a lifestyle of 2,500. That is for broadband, internet, subscriptions, and then you have a gym membership. And then if you have bought, a sports equipment, okay, a purchase of books and magazines, all this you can claim. That is separate. That is just 2,500. Then recently during this COVID pandemic, they brought another additional 2,500. It's called a Penjana relief. If you have bought any laptop, anything from 1st of June to 31st of June. How many of y'all are aware of this?
I missed this.
Yes, I'm aware, but
Too
was
late to
not
wait lah.
needed lah. Too late a bit lah.
Yeah, actually, this fellow is also very smart. They actually they didn't. You see, the tax law, they have to gazette it. No, they only gazetted this in December. So it's not fair also because it was not brought into attention in 1st of June itself. So many people, many of my taxpayers lost this.
Yeah.
So it's not fair lah. As government also want to inform properly lah, isn't it? So that everybody can take note of this. So this is an additional relief given for the COVID pandemic. Okay. And then domestic travel. Of course lah, I don't know who went and travel lah, but there are people who traveled actually. Anybody has traveled, right, from 1st March 2020 to 31st, you can actually claim a domestic travel with the booking. Just give the booking.com or whatever is it and claim that. So you can claim that. That is something additional also under the Panjana relief. Okay. Insurance and KWSP, you all know last time was a combination of 7,000. That means it doesn't matter whether it's life insurance or EPF. They gave you straight away 7,000. Actually, whatever they gave, they're taking it back. Now they have actually broke the thing into insurance and KWSP. Come on, lah, who buys insurance for 3,000 life? I mean, people from the middle income, I don't see because I've got 80% of my clients are all EPF contributors.
Yeah.
You know, so it's very sad to actually mislead them. And now they only gave 4,000. 4,000 a year EPF is not enough. You should have just give maximum 7,000. You know, so that they can knock that off from their income, you know, and
Yeah.
pay lesser tax. So this is also something that I was like, we are writing to the board lah anyway. We are actually, I'm also a member of the Council Certified Tax Institute of Malaysia. So we are actually writing into them to speak on behalf of the taxpayers. So let's see what they have lah. The income tax a bit sticky lah, the people. So now you see they have broken that. So if you have got life insurance, you're actually losing out. You know, many people don't have life insurance up to 3,000. Your EPF, you have maximum.
So have to take life insurance lah.
Yeah, that's it. You know you rugi ma.
Yalah, rugi lah.
Rugi. That's what I'm saying. So all these are actually not unnecessary lah. You know, because private sectors everybody will claim EPF. Public sectors got no EPF.
Yeah.
So you see all these kind of things they take advantage of. So that is one. Childcare, they have increased the childcare center. Initially was actually 1,000. Now they have actually increased it to 3,000 because you know lah, during COVID, everybody send their kids. You know, before COVID lah, I mean, everybody send their kids to homeschooling and all. Not homeschooling, to daycare center and all this. So this one they said okay, we increase lah. But anyway, now during the pandemic, people will not send. They will stop. So I don't know what's the benefit of this lah. So other than that, the rest all is the same. But if you have,
the education fees got two. One education fee is 7,000. Then the other one, education and medical insurance. The last one.
Yes, that is different. You see, education and medical is insurance. Let's say if you have bought insurance for your children on education, you can claim.
Oh, okay.
Yes, if you have bought medical for your children, you can claim. If you have bought medical for your spouse, you can claim.
Oh, can, huh?
Can. You can claim. Yeah, but send me the statement. Let me go through first the statement. I got to view the statement first. Okay. Education fees. This is not insurance. This is something that you take. Let's say if you take a course, but that course must be registered with the Jabatan Pendidikan di Malaysia. Okay, so you take any course on degree level or master's level or doctorate level for your self-development, then you can claim this, but subject to certain criteria.
Professional courses?
Yeah, that's what I'm saying. Professional courses subject to certain criteria.
Oh, okay.
You have certain categories that they allow you to claim. Need to check this one list. Okay. So any questions?
What do you mean by serious disease suffered?
Okay, actually serious disease suffered, right? They have a very particular list: leukemia, cancer. If you have amputated your leg, hands, heart attack, hypertension, that is under Schedule 1 category. That also they have a specific requirement for it. Diabetes is not, and then if you unless have diabetes, that means maybe to the extended version that also I don't know. You need to actually see what is your seriousness of it. So what they understand serious is cancer, leukemia, brain tumor, any of your organ amputated. That's all.
Okay.
This is their definition of serious disease.
Mm.
If you all want to know more about this anything, right, don't worry, just shoot me an email. I will clarify for you because we have access to our database in
Okay.
text. So I can give you more information in the sense that what is claimable, what is not claimable.
Okay.
Okay. So everybody okay? Good to go? Mel, okay. Mr. Eric, no sound at all. Mr. Eric, you don't want to ask me any questions?
Yeah, I have a question about the education fees though.
Yeah.
Do they have like a specific criteria in order to fulfill that
No.
requirement?
What do I mean specific criteria means they are only referring to the field of education. That's all. That means they have like law, you have like you can't simply take courses, professional courses. They want to know what courses are there. So they have like okay, if you're taking masters means masters and doctorate must be in what, like they have like law, what they have like Islamic law, and then accounting, and then engineering. Those kind of, they're talking about the field of studies that you're doing.
I see.
Yeah. So they're quite particular in that.
Okay. All right.
And the other thing that particular is you, of course, you have to take it in a registered institute lah.
Okay. Understand.
Chatted with the financial planner, recently went through this. Okay, very good. So if you're aware of this, okay, because I would strongly advise you, right? Part of my tax planning, this is just a small portion of it, but I would say utilize whatever you can. Okay, and anybody has kids here? If you have kids, please don't forget to put under Scheme Simpanan Pendidikan Nasional, SSPN.
That
Now they've given 8,000.
is there a limit? Like, I mean,
8,000.
their age?
There's no age. You just go and register using your child's IC. Okay, but you can't take it out. I mean, you can take it out lah, but it's only for your child 18 years lah. Okay, and then the claimable amount will be based on the net withdrawal.
Oh, okay.
On that year. That means you put and you take out the net lah.
How does the PRS work?
PRS is different. PRS is actually a private retirement fund. That one maximum 3,000. That one you can't take out. Up to the age of 50 something, you can't take out. It'll be there and then it'll make some, I think, a small amount of interest or what. But basically, all my clients do it because of claiming lah. You know, they want to claim 3,000 every year. They want to claim. So PRS is like that. SSPM is different. You can put, you can take out, not an issue.
But they must be below 18 lah.
Yes. No, they're not below 18. They are only able to withdraw it out. They got some criteria because they got two. One is SSPN, one with savings, and then one is SSPN alone. So both has got different criteria. But children, as long as your child is your child, right? There's no age limit.
Oh.
It's an education fund. You can put in.
Okay.
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 All right. So sorry, just now I accidentally skipped that. Okay, because I was, I wanted to share you with this. Okay, just now we went through the computation of this, not this. Okay, this. Okay, this will be basically your computation. Okay, as I said, your sole proprietor will be the net profit, as what I've discussed just now with you. Okay, what will happen is, remember you asked me a question just now, what are the expenses that we can claim? Okay, this is just, why do I put only 3? Entertainment, petrol, parking, and telephone bills. You realize there's a fraction here, 1/2, 1/3. Okay, this is not something given by us. It is actually in the law. Okay, so these are the basic expenses where we will actually always scrutinize on the taxpayer. Okay, I only put down these 3 because there is actually a whole list of it, but it might not be applicable to everybody. So these are the basic one that you will want to take note of. Okay, so basically entertainment expenses. Okay, entertainment expenses, it doesn't matter how much is entertainment expenses, only 50% is allowed. Okay, petrol, parking, toll, only 1/3 is allowed, not more than that. Telephone bills, 1/3. All this fraction is given. This is a common law by the tax authority, by LHDN. You can tell me, oh, I used it 100% for business and all this. Yes, you used it for 100% for business. But at the end of the day, you will still use it for some element of private usage as well. So the IRB refused to accept that it is 100% of your use. So the tax law has put a fraction that this amount of tax has to be taxed. But you will ask me the question, how about those expenses just now we spoke about? That one, nothing to do with this. That one, all you can claim. Only specific expenses of entertainment, petrol parking toll, telephone bills. These are expenses that is actually dual usage. That means it's for private purpose as well as for business purpose. So this one you really cannot use.
Internet?
Internet, like what I said, internet depends on your business. If you require 100%, you move it to your account, company account expense. You don't need to put it under here.
Okay.
If it's for dual purpose, then we really need to look into it. Okay?
Okay.
Okay. So I'll explain to you afterwards the expenses. What do I mean by all this? So can you see something called capital allowances?
Yeah.
Okay. I'll move on to the capital allowances schedule for you. Okay.
Just one question before moving.
Yeah, sure.
Sorry, this on the private, just personal
Sure.
one. Medical insurance, if they are already 18 years old, is it still claimable?
As long as your daughter is not working,
Okay.
she's unmarried and she's under your care, you can claim.
All right. Thanks.
Sure. Okay, so when you say capital allowances, remember just now I told you about fixed asset, purchasing fixed asset in your balance sheet. So, okay, what has happened is, okay, at initial stage when you actually purchase a fixed asset, right, there is a depreciation, a wear and tear amount that is charged to the asset. So what the income tax has said is that expense is not allowed. So they started taxing that amount to the taxpayer. So what happened is we actually wrote, because it's not fair, right? Because you are the taxpayer and there are certain assets that you're buying for the usage of the company. And that amount, that means they have like a 10% depreciation amount, every year. That means they consider a value for the wear and tear. They're charging it back to you. That means they're taxing you back on it. So taxpayers were not happy about it. So we wrote to the board saying that I think it's not fair because they need the assets to run the business. So after ding dong, the LHDN decided to say, okay, fine. Since we are taxing the amount, we will give something called capital allowances to the taxpayers back. Basically, when you buy the asset, right, there is an allowances that the government has given to you that you can claim. You tell me what is so big about these allowances. Yes, it is something very big because it actually reduces your tax. So can you look at this capital allowances? 24,000 is being reduced. Okay, so now I will show you how do I get the 24,000. So if you look at this schedule, capital allowances rates, these are actually each individual asset has rates. This is fixed by the tax law. Okay, so how this is calculated is like this. This is a capital allowances schedule. Okay, basically, if you see, the government has given 20% and 10%. IA means initial allowance. That means the first year you buy, you get the claim and initial allowance here. And the annual allowance is every year you claim. That means the first year you get 20% and 10% to claim out of the total amount of this. So every item you buy, right, you get to claim. And you see, you will have this amount of allowances to be claimed back under your tax. So you are actually given the benefit to buy assets. On top of that, not only using the assets under the company, sometimes you also take charge of the company because anyway, you are the sole proprietor, right? You also get to use that to claim tax. So you see, it is indirectly reducing your chargeable income from here. You get to knock off 24,000. This is just an example figure. And your total income will become from 197 to 173. On this total income only, you will actually minus out your relief and you will get the amount of tax to be paid is 25,000. You know how to calculate this, right? Income on the first 100,000 is actually based on this bracket. So you look at this income on the first 100,000 is 21%. It's already fixed. It's nothing for you to calculate. It's already fixed. Then you calculate the balance on the balance percentage here. So CP 500 is something that advanced tax. Has anybody received CP 500 so far here? It's actually an advanced tax. When you pay, when you have actually submitted one round of your business tax, right? And if you're taxable, you will actually get a scheduled tax payable and in advance, the LHDN will send to you.
Oh, they'll send.
Yes.
So I don't need to email them or
No
message.
need. You don't have to do all that. Once you submit for the first year, they should send you. If you're taxable, they will send you. So that one actually is good because it helps you with your cash flow. You get to pay so that at one go next year, you don't, one whole lump sum you're not able to take out means you just pay in 6 bio installment. They will calculate based on the tax that has been submitted the previous year. So you just minus that out and that will be your balance tax. Okay. The next question is you'll be wondering that, oh, okay, so why do we need to have a tax agent to submit? You see, you would not be able to do this portion and this portion correctly to save your tax because this portion has a huge list of expenses where we can actually claim against your income, and capital allowances schedule actually varies. This rates varies every year. So this is a particular rate that will be actually loaded in the income tax website, and different equipments, different assets have different tax rates. That means you have 10%, you have 14%, you have 20, you have 40. So they have all different rates. So you need to embed this into your calculation of your capital allowances. So that's what the calculation for a sole proprietor is totally different from a straightforward employment income. Then you will ask me a question that what happens if I need to submit employment income plus my business, correct? And your business makes losses. So you have another headache there. Okay?
Yeah.
But are you aware if you combine in your business makes losses, right? There is a computation where we do the business losses can set off your employment income. So you might be at a position where you have zero tax.
You sure or not?
Yeah, Mr. Kumaran, doing this for 20 over years.
I know lah. Just kidding.
So you see, people don't understand this because if they assume that, oh, okay, I'm doing employment income, then I'm doing business income. So there are circumstances where I have actually received submission, like I don't understand what was declared. Then they say, no, someone prepared for me, a tax preparer prepared for me, a freelancer prepared for me. See, I'm not here to blame anybody, but the tax law works differently. If it's a pool of income, a combination of income, the calculation is totally different. If it's only employment income, the calculation is different.
Okay.
Then add on if you have rental income. Imagine if you have rental income. So you're going to bring your rental income. Some of them take the rental income and set out business income. No. That doesn't work that way. So you have different segregation of income. You need to know how to pull all of them into one combined declaration. So each one of these income has got their associated law which comes by with it.
Okay.
So that's why I say that, some of them say that, oh, I can do it myself. Yeah, you can do it yourself, but it's not as straightforward as an employment income. Because especially when you're doing it for the first time, please don't do, I'm not saying this because you need to come and appoint me or no. You can analyze the situation for yourself because for a first timer, when you submit your business income, they will audit you. They will audit you. A very simple scenario, I'm a tax agent. I'm registered. So when I submit my returns, it will show tax agent. It won't show my name, it will show tax agent. You can see my name under my submission. The first year I submitted, knowing I'm a tax agent, I was audited. So the rule is the minute you submit, they will call you, they will request for audit documents from you. So let's say first timer, you assume that because why I'm sharing this scenario is I see a lot of taxpayers assuming that, oh, you just put in and then you minus out and then you tax back. No, it doesn't work that way because now the penalty is if you have done a wrongful return or under declared, it's 45% of the under declaration. Add on with the balance tax that you need to pay. So unless you're 100% sure of your computation, then by all means proceed to submit. Even the forms are different. You need to submit form B, not form BE. BE is totally different from form B. You need to impute your losses, your capital allowances, your financial statement figures. Everything has to go in. So there is a variation of submitting employment income and also a business income. So you can actually look through it once you see your own form, then you will know. So just go through it before you actually decide of submitting it. Okay.
So what you're saying is best. The first year of submission is very important.
Yes, it's definitely very important. You yourself will see it, even if you don't want to appoint, right? You once you get your P&L and balance sheet, right? You will need to compute tax. How do you compute tax?
I don't know. You tell me.
So you see employment income, you get your EA, correct or not?
That's quite straightforward, lah.
Exactly. Just take your EA figure, put inside. You know why I'm saying this or not? Because I've got up to today, I've got 15 cases pending on penalties.
For personal income.
Yeah, on personal income. And I'm struggling to help them to reduce the penalties. Because you know why? It's self-assessment system. So the officer says, kalau tak tahu buat, you kena cari ejen cukai untuk buat. At least pertama kali buat tu. Then after that, kalau you rasa you boleh buat, then it's a different thing. But normally, sole proprietors, unless your business is very small and you are willing to take the risk, then you do it yourself. Because what will happen is when they pick your file for audit and they realize your capital allowances are wrong, your tax deductible expenses are wrong, eventually your tax calculation will be wrong. So that will upset them because they're supposed to get more tax, you see.
Yeah. I've got a, never mind. I think I'll SMS you because recently there was one issue with my personal income tax. I usually get a waiver of for my alimony actually, but
Okay.
this time around they refuse to give me that.
Okay.
Why is that?
What? Okay, if you say alimony, what are you referring to?
A divorce payment, monthly payment.
Okay, why was that not given to you?
Yeah, so this time around they took out that amount.
Okay.
And they say this is an error of yourself, so they tax me on that additional 1,500.
No, I think I got to see your tax form. Before I actually give you an answer, I got to see your tax form. What was actually imputed in the tax form?
All this while I've been getting. Okay, never mind. Maybe I'll speak to you offline.
You then probably have a look at your form because I think I know what has gone wrong. So, never mind. We will take it off the Swan session. You let me have a look at it. Okay. So coming back to the capital allowances, these are the assets. Okay. So this is how we compute. And that's what I show you. This would be your concern. Okay. This is how a normal framework, a very simplest version of framework will be done. But of course, for companies, this doesn't work. It's totally different, Mr. Eric. The company's version is totally different. Okay. Okay. Now I'm just going to take you run all the while I've been sharing with you all like capital allowances. I know how do you plan your projected cash flows. All these are actually planning tools. This specifically is actually will be your major tax saving tools. Okay, see, as for a company, you of course you have MOLA. Okay, you have a lot of other things we can actually adjust on all the other expenses, operating expenses, admin expenses. But if you are a sole proprietor, right, these are the legitimate ones you can actually do because let's say if you're referring to donation, okay, donation you can make to exempt bodies. Okay, your donations are allowed up to 7% of your aggregate income. That means you get an exemption. This donation just ensure the organization that you're donating is actually tax exempt. There will be a chop on the receipt saying that it's tax exempt. Okay, so just ensure that. So you should capitalize on this. Okay, the next one is wages. When I say wages, right, I'm referring to, let's say like if your business is actually a small business and then you feel you're paying quite a huge tax, right? Let's say if you have someone, let's say your sister, anybody, siblings or what, if you want to pay them wages, it's fine. Just ensure that they are not taxable on any other tax. You can pay them a wage, 700, 800 per month, not more than that. Okay, so it is actually a claimable expenses. It is actually indirectly helping you to save tax. At the same time, you are paying to someone, that you know. But ensure that she is not taxable. Okay, so it could be someone that is below 18 years old or above 18 years also can, but she must not be, working somewhere and declaring any tax or anything like that. If she does, then you have to take care of that as well. So in most cases, wages are still acceptable. Okay, because
Wages.
normally wages, you pay wages saying that she's helping you in admin and bookkeeping and all these things is still acceptable. You
Can.
need to prepare payment vouchers, prepare all those necessary documents lah. Okay,
Okay.
all that must have lah with her IC and all these things. So
Can I put it for myself?
how can you pay wages for yourself when you are the owner of the company?
Salary lah. Say salary cannot.
Cannot, salary cannot. You put as drawings.
Oh, drawings.
Drawing. Salary cannot. You cannot claim a salary to you. Wages is for third party.
Okay.
Okay.
So drawings lah.
Okay. Then telephone. Okay. Telephone, what you can do is moving forward, you buy the telephone or the line under the company. The telephone definitely is sole proprietor. You have to buy it under, I think you can buy it under your company. So in that case, that is an asset to you. Okay, the phone become an asset to you. And let's say if you say the phone is bought under the company, the line is something that I need to use, then there is a small element that we can claim the whole expenses under the company, provided we need to justify that kind of business nature of your company, we need to use the phone 24 hours. So don't buy the phone under your name, park it under the company. Obviously you will be using it, but 100% is actually for the company. Okay, and then the other one is it's an asset. Buy all the assets that you think that is related, but please don't go and buy a gym bicycle and all these things and tell me that it's for business purpose lah. Okay, whatever assets that is in the production of the company, you can buy and park it under the company, because why not, right? You are the owner of it, you are using in the business, you can keep it there, you can claim until the amount finishes, right? The whole years, let's say for 3 years you buy motor vehicle, you buy the motor vehicle, charge it under the company. The HP principal that you're paying, right, you can claim it under the company. So why do you need to buy it under your name? You see, so all this, you are using the vehicle for the business. At the same time, the capital allowances given to you reduces your chargeable tax. And then automobile, like what you asked me just now. Automobile basically refers to everything lah. You are in an auto, everybody's in the pandemic. We need to buy the fax machine. We need to buy the Zoom lah. All this is all claimable because situation is such. Everybody is working from home. We need internet. We need fax machines. We need scanners. All this kind of thing. Just don't buy anything under your individual name. Charge everything under the company. So all those indirectly becomes the company assets, and you are able to claim the allowances for them. The next will be EPF. You'll ask me, what is this EPF 19%? Actually, the income tax doesn't allow EPF payment those days. The recent law they have passed is they allow you to deduct EPF portion 19%. So remember just now I said you pay wages. For example, you get your, anybody related to you or someone that you want to put in your company, you can actually claim their wages and also pay them. That means basically you know to put them in the payroll. If they are in your payroll, they cannot be wages. You have to pay them a small amount of salary. You can pay the 19% EPF. You can claim the EPF portion as your expenses, as your company expenses. So you see the money is actually not circulating out. This is what I'm explaining to you are tools that you can use to actually plan your tax.
Just a clarification purposes. So I've got one personnel in my business who is right now on wages. Wages means there's no EPF.
Yeah, that's right.
So is it better for me to put her in a EPF?
I would suggest you to put her in an EPF.
Better
because it's more legal. You get to pay her salary, you get to claim that, you get to pay her EPF, you get to claim that. So why don't you put her on that?
Okay.
You don't lose anything, you see.
Okay.
So a big chunk of the EPF and salary itself will reduce your profit.
Yeah, yeah.
Wages, you can't go much. Because if you pay more much, they will start asking you, who is this person? Why you're paying wages instead of paying a salary?
But we can also say it like, there's two type of employment, right? One is for service, one is what, contract on service, and one is for service.
Yeah, no, but that is not for applicable for normal trading business, because you see, normal trading business, there's only two types of payment. Either they're on wages or they're on payroll. If they're on payroll, you must have SOXO, EPF, all this. If they're not on payroll, sorry, you have to put them in wages. That's about it. Because you see, yours is trading. You are not having a consultancy firm.
Right.
So consultancy firm or service firms, yes, we have contract for service, contract, all these things different. The way they treat payments are different, because we have people who come in once a month, and then we pay them like 30,000-40,000 to do some,
Yeah.
consultancy. So that is different.
Okay.
Yours is not that. Yours is normal trading business. So trading, the first thing that LHDN will attack you is your payroll. So when they start seeing your wages suddenly got 1,008, 1,005, then they start asking you why you pay wages 1,008, 1,005. Go. Their wages definition is 600, 700. That's all.
Put two payments,
Even though you put two payments, also still goes to the same person, or still goes to a different. If different people, you must prepare documents. Then okay. For the same person, is still a remittance given to the same person.
Okay.
That's how they will attack you, lah. That's how they do audit on you. Okay.
Okay.
So wait, I will show you. Okay, I've written a lot here because I just want to explain to you, lah. What do I basically simply mean by claims for extra telephone minutes, like voicemail, call forward, call display. All these gadgets that they have for business use. I don't know, all this IT related, lah. They have a list of it. So all this, if you're questioning me whether can or cannot, can. It's written here 100% deductible. You can use this. Okay, you can claim for your business, because without this, you cannot run your business. You see? So that's why I took the time to write so many here, because I just want to show you all, like, see, cellular phone, pager, or now you have all kinds of IT gadgets, right? All that is claimable if it's for business use. Car for business, like what I told you, let's say if the car is actually car loan interest, if it's not, the HP agreement is not under the company, of course you can't claim this. If it said, yes. Let's say that the vehicle is your vehicle, okay, not under the company. Petrol, maintenance, repair, insurance, only a certain portion can claim. When I say a certain portion, I need to look at your business first in order for me to decide how much is claimable. Okay, let's say you tell me, no, Tilis, I use my business 100%. No, I disagree on your opinion. Actually, it's not my opinion, it's actually the law. Then I'll say, okay, Mr. Kumar, then you have to prepare a car log book for me. What does the book simply means is you need to actually daily record the kilometers from where to where, from which client's place to your office, which I don't think we have time to do this. So that's what, when we wrote to the board, we said that let's not go and penalize the taxpayers by giving them this to do that, because they are business owners, they don't have time to do this. So we'll come to a fair deal of view of giving some portion to the tax and giving some of it to the taxpayers. So that's where we came with that, a fraction of 1/3, a half, and then some got 2/3. So that depends. So when we prepare the tax, we will look at your this one. We will analyze, and then we will tell you what are we going to do about it.
Road tax, no.
Everything, car road tax, petrol, whatever is related to your vehicle, insurance, road tax, maintenance, repair, petrol, parking, toll.
Okay.
Everything is included. Okay. Family members, I told you, like maybe your spouse or children, effective way to split the income and result in more favorable overall tax bill for their family. Like what I said, rather than pulling up everything to one person, you can share the split of it by paying your spouse's wages and salary. That one is for you to decide. Okay. Purchases or replace of business equipment. What I told you, these are all capital assets. They're entitled to 50% of the rate regardless of when items are purchased. Like what I'm saying, let's say on 31st December, you come and tell me, oh gosh, I haven't bought. You still can buy, and I will still claim the whole year rate for you. So this is something that you should look forward. If you want to claim, better buy all the assets. as long as you look at that, the criteria is, you see, motor vehicles, machines, office furniture, as long as you're operating in the business, it's a business asset. Assets are used in the business and you are the owner of the asset. You just have to fulfill this criteria. That's all. You are done. You can claim all this. You can justify to the income tax. But of course, you need to have documents for all this. Normally, we will ensure there's everything is there before we claim.
I've got one question. You see, in our business, we need a goldsmith to do the work, right?
Okay, all right.
Some cases, we actually outsource the job to an individual Indian foreigner.
All right, okay.
So, but there is a fee, right, that we pay.
Of course.
For service. How do we classify that?
No, he will be basically like your subcon fee lah.
Or subcon fee.
Because he's like your subcontractor, right?
Yeah.
So your business, he's actually a subcon, because without him you can't do, right? So you need to pay him. That's nothing wrong. Just make sure you have all his documents in place lah.
Okay. In terms of fees lah.
Yes.
Okay.
Because you can't put him on salary or wages.
Yeah, I can't put him.
Yeah, because he's a foreigner. So why get into unnecessary things? So better just trade him a subcon fee lah.
Okay.
Okay, so EPF contribution, as you know, I'm telling you maximum 90%. Why I say this is a benefit? Because you actually basically give it to your, relations. So relation in the sense that normally like son will have the father's business and all these things like, those kind of things. Oh, your nephew, nieces, they can help you to do some admin jobs, some, accounts like filing and all these things, and then issuing invoices, preparing payment vouchers. All those kind of genuine kind of tasks still has to be done, you see?
Yeah.
So that is also part of it. And capital allowances, like what I said, it's all claimable under your assets. So basically, these are all some of the items. There is more towards this, but this is only limited to your sole proprietorship. For company, you use this, but you have more, it's an extended version. That means we can actually do more on other expenses. Company, because Mr. Eric is actually, he has a company, he's a company director. So why I'm saying this is, these are all basic, specifically limited to sole proprietors, because there are certain things that sole proprietors can't claim as what companies claim. Company has a bigger view of claiming expenses. So we do adjustments on those expenses as well. So these are all some of the safe saving tools for tax that, as a sole proprietor, you all can think about it. There is others, but depending on your business nature only, I can, advise accordingly. So I guess that's all I have for today. So now I'm opening to your questions. You all can actually shoot me if you have any questions. I know you cannot digest everything in one day lah, but this is what I wanted to share. So is there any questions that you want to ask me, or you all can also write to me, not an issue. Anything that you want to ask me, you don't understand, and I really need your honest feedback on the session. Was it okay? Was it what do you have an overview of what you need to look into your business now, and how to plan, especially plan your tax?
I appreciate the knowledge. Actually, it's easy to digest. Of course, there's there's things that I need to relook at, like for example, like for the documentation aspect.
Correct.
I have a question though.
Yeah,
No,
sure.
forgive me, 2 questions.
No problem.
So in regards to telephone bills, because I only have one number and that number is both my personal and business number.
Okay.
Okay, is that how do I?
Okay, you can claim that, but only a certain fraction.
Certain fraction.
Yeah, but it's claimable. It's claimable because anyway you need to use it for your business as well.
Okay, so for that, all right, that one. So in regards to wages, because the few things I pointed out that can pay wages to your family members, especially if they've done like